Hello my dear CA final students appearing for May 24 exams, the most awaited mighty 50 questions discussion. So we are going to do in this video, and the PDF related to this mighty 50 already I have shared. It is there in my website under downloads. Also you can see in the description to this video, and these 50 questions I have selected from solved workbook and some questions based on amendments I have coined, and some questions from May 24 ka RTP, and these 50 questions covers all the portions, that is GST and customs, considering the revised weightage of 80 marks and 20 marks for May 24 new syllabus. And these 50 questions are must, and you need to definitely have patience and try to listen to each and every question, not only the answer but also the approach to that question we need to understand, and the other aspects of this question also I'll be sharing with you, and even some presentation tips that I will share in this video with respect to how to present and solve the practical questions. Okay, so without further delay, let's move on to this. And I have given the index wherein if you already have the solved workbook, so you can see from which question or which page number I have taken those questions, and few questions are amendment questions and RTP questions. So let's start with the question number 1. GER Limited of Germany supplies luxury car worth 1 crore to IND Limited of India. So it's an import. Before the car reached the Indian port, but after crossing the territorial waters of India, IND Limited sells it to T1 Limited by way of transfer of documents to title. So any sale by way of transfer of documents to a title before import is excluded from supply. So before import here refers to before crossing the customs barrier. So when it will be before crossing the customs barrier, the importer files the bill of entry for home consumption or bill of entry for warehousing. So in this case, IND Limited, before filing bill of entry for home consumption or warehousing, if they transfer the documents of title, that is called a sale before import. Here IND Limited is selling it to T1 Limited. So IND Limited will get some money from T1 Limited, and IND Limited is not required to pay any GST because the said activity is excluded from supply as per 7 subsection 2 Redwood Schedule 3 of CGST Act. So therefore here T1 Limited is going to file the bill of entry, and they will anyhow pay the customs duty along with IGST. So therefore IND Limited is excluded from supply. Now one point which is not connected to this question but it's a different point, that is, what is the assessable value in case of customs duty on which T1 Limited is required to pay. So whatever is the price at which T1 Limited is procuring the goods from this IND Limited, that price will be taken as the assessable value for payment of customs duty by T1 Limited. Okay. Now what T1 Limited is doing, T1 Limited clears the said car for warehousing. So T1 Limited filed the bill of entry, so therefore they will be for warehousing, so which means they will not pay customs duty. So these goods are deposited in the warehouse without payment of customs duty, means the inbound bill of entry would have been presented by T1 Limited, and stores the said goods in a customs bonded warehouse. T1 Limited sells the car from warehouse to T2 Limited. So sale by T1 to T2 is also excluded from supply. Sale of warehoused goods under customs is excluded from supply, because who will file the ex-bond bill of entry here? T2 Limited will file. So T1 Limited is excluded from supply, and T2 Limited clears the said car from the customs bonded warehouse. So due to that reason, so therefore T1 Limited and even IND Limited is excluded from supply. Now answer the following with brief reasons. Is GST leviable on import of goods from GR Limited by IND Limited? Yes, import of goods is covered under levy for the purpose of customs as per customs section 12 of Customs Act 1962. Import of goods into India is chargeable to customs duty. So yes, IND Limited is having the customs duty liability including IGST. Then number 2, is GST leviable on supply of goods by IND Limited to T1 Limited? No, it is excluded from supply because it is sale before import by way of transfer of documents to title as per 7 subsection 2 Redwood Schedule 3 of CGST Act. Then C, is GST leviable on supply of goods by T1 Limited to T2 Limited? No, it is also excluded from supply as per 7 subsection 2 Redwood Schedule 3, that is sale of warehoused goods under customs is excluded from supply. Then is GST leviable on clearance of goods by T2 Limited from the customs bonded warehouse? Yes, T2 Limited, when it clears the goods from the customs bonded warehouse, they need to pay customs duty along with IGST. So the IGST is applicable. So GST leviable on clearance by TT Limited from customs bonded warehouse, as customs duty is levied on warehoused goods, and GST is also levied along with the customs duty. So that is this particular question number 1, which is related to exclusions from supply. Then, so try to give the reference to the extent possible, that is section reference and the act reference. So here, whenever you are seeing exclusion from supply, you need to write as per 7 subsection 2 read with schedule 3 of CGST Act, and even you write the provision and then connect the provision with the question, and finally you conclude. You ensure that the 4-point approach is present here. What is that 4-point approach? First you need to give the reference, and then you need to write the provision, and then you need to connect the provision to the question, and finally you need to conclude. And next one, question number 2, answer the following questions. In the first part, a hotel owner provided accommodation service in Haryana through an e-commerce operator, Cool Trips. The hotel owner is not liable to get registered as per the provisions of section 22. Subsection 1 means they would not have crossed the threshold limit for registration. Who is the person liable to pay GST in this case? So we have section 9 subsection 5. There are 4 notified services. So the liability to pay GST on which is on the e-commerce operator. 4 notified service through e-commerce operator, liability to pay GST is on e-commerce operator. What are those 4 notified services? Number 1, H, housekeeping services, A, accommodation services, and in case of housekeeping service and accommodation service, the supplier should be unregistered. And in case of transportation of passengers by any motor vehicle or eating food from the restaurant, whether the supplier is registered or unregistered, it will come under 9(5). Right now we are talking about accommodation service. In case of accommodation service through e-commerce operator, the supplier is unregistered. So this particular service will come under 9 subsection 5, where the liability to pay GST is on e-commerce operator, that is Cool Trips is liable to pay GST in this case. So who is the person liable to pay GST in this case? Cool Trips. So that's what we need to write as per 9 subsection 5. As a supplier is not registered, so liability to pay GST is on e-commerce operator. Okay. So then next, in that question number 1 part B, would your answer be different if the e-commerce operator does not have a physical presence in India? Even then the answer will be same. If the e-commerce operator is not having any physical presence in India, then we need to check whether they have any representative in India, and that representative is liable to pay GST. If there is no such representative, the e-commerce operator Cool Trips should appoint a representative in India for the purpose of payment of GST. If Cool Trips does not have physical presence, person liable to pay tax is the person representing the e-commerce operator. Then that is about the first question. Then second question, Mr. X, a Delhi resident, submits a cab request to Speed Cars for traveling from Delhi to Gurgaon. Speed Cabs is a mobile application owned and managed by Speed Technologies Limited, located in India. So X is the passenger and Speed Cabs is the mobile application. The application facilitates a potential customer to connect with persons providing cab service under the brand name of Speed Cabs. After Mr. X pay the cab charges using his debit card, he gets the details of the driver Mr. Y and the cab's registration number with reference to GST. Discuss who is liable to pay GST in this case. In case of transportation of passengers through any motor vehicle, so the liability to pay GST is on e-commerce operator, whether the supplier is registered or not registered. In this case, Mr. Y, the driver is the supplier, whether Mr. Y is registered or not registered, the liability to pay GST is on the Speed Cabs e-commerce operator. Okay. Will your answer be different if Speed Cab Technologies is located in New York and does not have a representative in India? So then they need to appoint a representative in India for the purpose of payment of GST. So in this case, the liability to pay GST is on Speed Cab Technologies. If they don't have physical presence, they need to appoint a person in India, and that person should be appointed. That person is liable to pay GST. Then third part, Mr. Y, Chennai resident, books omnibus motor vehicle greater than 6 passengers. So we have an amendment in 9 subsection 5 which says that transportation of passengers through omnibus by a company through e-commerce operator, transportation of passengers in omnibus. What is omnibus? Capacity greater than 6 passengers is called as omnibus. Transportation of passengers in an omnibus by a company through e-commerce operator will not come under 9(5). The liability to pay GST is on the supplier. So what are the condition? The supplier should be a company and the transportation should be through omnibus. So capacity greater than 6 passengers, then 9(5) will not be applicable. So here Mr. Y, Chennai resident, books omnibus operated by XYZ Limited company omnibus through Redbus e-commerce operator. So the liability to pay GST in this case is not on e-commerce operator but on the company XYZ Limited because of the amendment that we have. So however, if see this, so liability to pay GST is on XYZ Limited but not on Redbus. Okay. Then next one, will your answer be different if XYZ company is a partnership firm and is operating an omnibus through e-commerce operator? Yes, the answer will be different. So only if the supplier is a company and if it is omnibus, 9(5) not applicable. But if it is any other person other than company, any other person, even though it is omnibus, it will be coming under 9(5). The liability to pay GST is on e-commerce operator, whether the supplier is registered or not. So in this case, the liability to pay GST is on e-commerce operator, that is Redbus. Okay. So in the second case, the liability to pay GST is on Redbus irrespective of whether XYZ and company is registered or not registered. Then question number 3. X Limited, a GST registered dealer, is in the business of cashew processing. So we have the list of notified goods now which is covered under RCM wide notification for 2017 section 9 subsection 3. So based on that list of goods which are covered under RCM, they can coin a question like this. This is an amendment based question. So cashew nuts processing, during December 2023, it gets the following supplies. So purchase of cashew nuts. So X Limited is a GST registered dealer. They are registered. They are purchasing cashew nuts from Mr. Ram 10 lakhs. Okay. So then they are purchasing cashew nuts from Mr. Lakshman for 12 lakhs. They are purchasing cashew nuts from ITC Limited for 15 lakhs. All the above figures are excluding GST 5%. And Mr. Ram is an agriculturist because he is a farmer and undertakes cultivation of land by paid servant under the supervision of his family. So Ram is an agriculturist. Who is an agriculturist? Agriculturist is a person who either carries out the agriculture cultivation or either through by him or through his family members or by any labor appointed by him. Then Mr. Lakshman is not a farmer but a trader, means Mr. Lakshman will not come under agriculturist. And ITC Limited is undertaking cultivation of land by paid servants, but they will not be called as agriculturist because basically agriculturist is only individual. So now we need to understand the definition of agriculturist. Agriculturist means an individual or a HUF, only individual or HUF. So companies will not come under the meaning of agriculturist. So individual or HUF who undertakes cultivation of land either by own labor or labor of family or by paid servants under his supervision, then they will be called as agriculturist. And we have RCM, so supply of cashew nuts not shelled or peeled by agriculturist to a registered person is covered under RCM, where liability to pay GST is on that registered person. First of all, so Ram is an agriculturist. When they are making sale to X Limited, it will come under RCM, where liability to pay GST is on X Limited and 5%. So cashew nut supplied by Mr. Ram, recipient X Limited is liable to pay GST RCM. So on 10 lakhs, 5%, 50,000. Then second case, Lakshman is not an agriculturist because he is a trader. So only those who cultivate will only come under agriculturist. So therefore it will not come under RCM. Liability to pay GST is on Mr. Lakshman. So therefore 12 lakhs into 5%, 60,000. Then even though ITC Limited is engaged in agriculture, but they will not be coming under agriculturist because agriculturist means only individual or HUF. So in that case again RCM will not be applicable. So it will be FCM only. So 15 lakhs into 5%, 75,000. So remember the point. So supply of cashew nuts by an agriculturist to any registered person is subject to RCM. So based on agriculturist definition, they can make a question like this on RCM and agriculturist definition. Then we are moving on to question number 4. Sanmati Industries is registered in the state of Maharashtra, receives a machinery for repair in its workshop located in Mumbai. So they are located in Maharashtra. There is a machinery for repair in their workshop in Mumbai, Maharashtra from Mitsubishi Limited, an automobile manufacturing company based in Japan. So there is a company based in Japan. They are sending a machinery to Sanmati Industries in India for doing the repair. The repair work was carried out by Sanmati Industries, for which it was to be paid in convertible foreign exchange, and goods were returned to Mitsubishi after being used for some time in India. Now, in that case, we need to apply place of supply provisions. So, section 12 or section 13. So, first it is what service? Repair service, repairs to machinery. So, service. So, supplier is Sanmati in India, recipient is Mitsubishi outside India in Japan. So, section 13. In case of section 13, this will come under performance based service in relation to goods. For performance based service in relation to goods, what is the provision? So, if the physical presence of the goods are required, location where service are actually performed, but we have 4 exceptions to this. If goods are temporarily imported for carrying out repairs or any other process, and it is exported after repairs or process without put to use, or import of pharmaceutical products for doing any testing, etc., or repair maintenance overall in relation to ships used for business purpose or aircraft used for business purpose, so it will be location of recipient. So, whether the exception is applicable in this case? No. Why exception not applicable in this case? Exception number 1 says, if the goods are temporarily imported for carrying out repairs and exported without being put to use, but here they are exporting after being used in India for some time, which means that exception not applicable. So, what will be taken as a place of supply? Location where service are actually performed. Where is it performed? In India, Maharashtra. So, location of supplier outside India, India, location of recipient outside India, but the place of supply is in India, exception 1 not applicable, and consideration is in convertible foreign exchange. Supplier and recipient are not to establishments of the same person, even though 4 conditions are satisfied, but as place of supply is not outside India, it is not an export of service, okay, up to that. So, therefore, it will be treated as deemed interstate and chargeable to IGST. Why deemed interstate? If once the place of supply is determined under section 13, if the place of supply is determined under section 13, it will be always deemed interstate and chargeable to IGST. Okay. 75C, supply in the territory, taxable territory, not elsewhere specified. So, therefore, it will come under deemed interstate chargeable to IGST. Up to this clear? Now, this is the part. Now, second part, actually the question is not done, but this analysis is required. The another part is that while raising the invoice for the said consideration, the accountant of Sanmati Industries approaches you as to whether the dynamic QR code is mandatorily required on the said invoice. You are required to advise him on the same. So, here whether dynamic QR code is required in the said invoice. So, we have something called as e-invoice and dynamic QR code in invoice. So, in case of export of goods or services, e-invoice is required, no doubt, but here it is not export of goods or services. So, e-invoice is not applicable, but when e-invoice is not applicable, there is a possibility of dynamic QR code in invoice. We need to collect the payment by scanning the dynamic QR code, but we have one CBIC circular which says that if the recipient is located outside India, but it is not an export of service, when the recipient is making the payment, as the QR code functionality is not there outside India for making the payment through scanning QR code, so it will not be applicable. You understood what is not applicable? So, this dynamic QR code concept is not applicable. We have a circular in this regard. Okay. So, Mitsubishi is not registered. Further, aggregate turnover exceeds 500 crores during the previous year. So, how you need to present here? So, why they have given previous year 550 crores? Because when dynamic QR code is applicable, if the aggregate turnover in any previous year from 2017-18 exceeds 500 crores, then dynamic QR code is applicable. So, first you need to write about the place of supply. So, you need to give the reference to place of supply provision. So, section 13. Okay, where services are supplied in respect of goods which require physically made available. So, the location where services are actually performed will be taken as the place of supply. So, in the given case carrying out repair work, the place of supply is Maharashtra. Okay. Then next you need to write about this, when dynamic QR code is applicable. So, dynamic QR code is applicable if any previous year from 17-18 exceeds 500 crores, then dynamic QR code is required. So, in this case Sanmati Industries, whenever they are making B2C supplies, they are required to give dynamic QR code. You need to write about that, and then you need to write about the clarification. What is that clarification? If the recipient is located outside India, but the payment is made and it is not an export of service. So as the recipient cannot make the payment through dynamic QR code, so therefore dynamic QR code cannot be used by the recipient for making the payment, so it is not applicable. So conclusion, the dynamic QR code is not mandatorily required on the invoice issued by Sanmati Industries to Mitsubishi Limited. Okay, so like that we need to present the answer. Okay, then look into question number 5. XYZ Limited, New Delhi, manufactures biscuits under the brand name Tasty Picks. Biscuits are supplied to wholesalers and distributors located across India on free on road basis from the warehouse of the company located at New Delhi. The company uses multiple modes of transportation for supplying the biscuits to its customers spread across the country. The transportation cost is shown as a line item in the invoice and is billed to the customers with a markup of 2% on the total amount of freight paid inclusive of taxes. So basically what they are doing is that they are making sale on free on road basis. So free on road is opposite to X showroom or X factory, means they are going to deliver the goods to the customer's place, and whatever is the freight cost, that will be added as a cost in the invoice. So how much ever is the cost that they are incurring including the GST, at 2% they are recovering it from the customer. So this freight will not be called as expenditure incurred as a pure agent. Why it is not called as expenditure incurred as a pure agent? Because they are making a markup na. So usually pure agent should not add any profit to this. So due to that reason, so this will definitely be included in the value of the biscuits for payment of GST. Then flour used for the production process is procured from the vendors located in Madhya Pradesh on X factory basis, which means, so this XYZ Limited is only need to arrange the transportation from the vendor's place to their place for bringing the flour. The company engages GTA to transport the flour from factories of the vendors to its factory located in New Delhi. The company has provided the following data relating to transportation of biscuits and flour in the month of April. So they gave this data. All this data is the various transportation costs that they have incurred. Now, what is that? You need to do the computation here. Based on the particulars given above, compute the GST payable on the amount paid for transportation by XYZ Limited when it avails the service of different transporters. So on this transportation cost, what is the GST that we need to compute? Compute the GST charged on transportation cost. Now when the transportation cost is billed by the company to its customers, on the transportation cost, what is the GST rate? Now they have given, assume the rate of GST on transportation of goods and biscuits to be 5% and 12%. So this is the place where we generally get confused. So transportation of goods, this is 5%, whereas sale of biscuits, it is not transportation of biscuits, not the transportation of goods 12%, transportation of biscuits 5%, not like that. So not 5% 12%, it is transportation of goods 5%. Sale of biscuits will be 12%. Okay, sale of biscuits will be 12% and transportation of goods will be 5%. Okay, so as 5% is given for GTA, so wherever GTA comes, it may be either FCM or RCM. So because right now GTA 5%, previously 5% means by default RCM, but either FCM or RCM. So here we need to take a assumption. What is the assumption? So remember this assumption that when the question is silent about RCM, so GTA, if 5% is given by default, we will take as RCM, unless in the question it is given that they opt to pay GST under FCM. Okay, so that is the assumption here. Now see the first one, for sales within NCR region, so they are selling biscuits. So the company arranged a local minivan belonging to an individual and paid him 54,000. So generally transportation of goods other than GTA or courier will be exempted. So this 54,000 will be exempted. There is no GST on that. Why? Because transportation of goods other than GTA or courier by roadways is fully exempted. We don't have to pay GST on that then. So the first one will be exempted, but we need to write the reason as to it is exempted. We don't have to pay any GST. Then second, for sales to locations in distinct states, the company books the goods by Indian Railways and paid a freight of 3,17,000. Transportation of goods by rail, specified or notified goods is exempted. Other goods will be taxable. What are the notified goods? Agricultural produce, food grains including flours, pulses, milk and salt, organic manure, newspapers and magazines, relief materials, defense and military equipment. But it is not that biscuits, so therefore it will be taxable. So 3,17,000 will be taxable, and transportation by railways is not covered under RCM. It will always be covered under FCM. That's an amendment now. So railways will always be covered under FCM. So it will be taxable under FCM. Okay. But here they are asking what is the cost, GST on this transportation cost, but you can write this point of FCM also. So therefore, how much is the GST on XYZ Limited? 3,17,000. So on 3,17,000 into 5%, that is 15,850. Then next one, for sales to locations in neighboring states, 55 lakhs, the company booked the goods by GTA and paid a road freight of 3,73,000. So for GTA services, we have 3 exemptions. If GTA service is provided by way of transporting these notified goods, biscuits is not notified goods. If the recipient is individual HUF or AJP not having a factory, no, the recipient is XYZ Limited, and the recipient is government registered only to deduct TDS. No, that is also not applicable here. So therefore, the GTA service will be taxable, and as it is taxable in the absence of information, we can consider as RCM. But they are asking how much is the GST payable on the amount paid for transportation. So they are not asking how much GST they will pay. How much is the GST payable on the amount of freight that they are paying. Okay. So not the GST. So therefore it will be taxable under RCM. But what is the GST component on that they are asking? So 3,73,000 into 5%, that is 18,650. Suppose if the question is how much is the GST that they are required to pay, then it will not be added in their liability. Okay. So they are asking how much is the GST payable on the amount paid for transportation by XYZ Limited. They are not asking how much is the GST payable by XYZ Limited. Then next one, for purchase of flour. So they are purchasing flour. So the company booked the GTA and paid a road freight of 55, that is exempted. Why? So food grains including flours, pulses, milk and salt is exempted. So due to that reason it is exempted, on that there is no GST. And next one, for purchase of butter from Punjab, the company booked the goods by a GT and paid a road freight of 35,000, that will be taxable because only transportation of milk is exempted, but transportation of butter will be taxable. We don't have any exemption with respect to this, it is taxable under RCM. But what is the GST component? 35,000 into 5%, 1,750. For local purchase of baking powder, the company books goods by a GT in a single carriage, paid a road freight of 1,500. Baking powder is not given in the list of notified goods, it will not come under flours. Therefore, it will be taxable and it will come under RCM. So liability to pay GST is on the recipient, but it's okay. What is the GST component? 1,500 into 5%, that will be 75. Previously we had the 1,500 freight exempted, but now it is not there. And next, for transferring biscuits to one of its sister concern in Rajasthan, the company booked the goods by a GTA and paid a road freight of 40,000. So this will be taxable. We don't have any exemption for biscuits. Notified goods exemption is not there, and the other 2 points also not applicable. So taxable under RCM 40,000. So 40,000 into 5%, 2,000. So 38,325 is the GST on the transportation cost. This is the first part of the question. Now what is the second part of the question? Compute the GST charged on transportation cost billed by the company to its customers. Now what is happening is that, so they are selling the biscuits and they are also providing the transportation service. So now this transportation service is part and parcel of the sale of biscuits, because they are only required to do the transportation. So it will be included in the value. So whatever is the biscuit, sale of biscuits, the transportation is also part and parcel of this, the expenditure incurred, but they are not providing transportation service. So please try to understand, don't apply composite supply, mixed supply here. So when you will apply composite supply, mixed supply, if XYZ Limited is selling the biscuits and they are providing transportation service, no, they are not providing transportation service. they are receiving the transportation service and the cost they are recovering. So they are not providing transportation service. If they provide transportation service directly by them, then you can apply composite supply or mixed supply. Here you should not apply that. They incur the expenditure and the expenditure is recovered. When they recover the expenditure, the character of this expenditure is the character of the principal supply. That is the main activity. What is the main activity? Sale of biscuits. So this expenditure is also added to the sale of biscuits, which means on this transportation cost, the GST rate for sale of biscuits will be applicable. So that is 12% will be applicable. Now what happens? First sales, if you see, for sales within the NCR region, so 54,000. So 54,000, and is there any GST on that? No. So but on this 2% they will collect as a markup. Who? XYZ Limited. And on that, how much is the GST that they will charge? 12%. So plus 2% into 12%, that will be 66,009. So 6,609.6, that is 6,610. The next sale, for sales to locations, so 3,17,000. On 3,17,000, how much is the GST? 5% is the GST. So that is 15,850. On that 12%. So how much? 39,942. So but there is a markup. So first we need to take 3,17,000. 3,17,000 plus 5%. That is the total cost. For the 2% markup you add, then you will be getting total freight that we will collect. On the 12% you take, that will be 40,741. But why in the second previous case we did not add GST? Because it is exempted. And third one, if you see third sale, so third sales, so 3,73,000. First 3,73,000. On that 5% GST, if you add, and on that, that is the total freight cost. On the 2% markup, this much we will be collecting from the customer. And into 12% is the GST on that, that is 47,937.96, 938. Whenever we are making sale to our sister concern, this markup is not applicable, because you see this, the transportation cost is shown as a line item billed to customers. So sister concern is not a customer. Due to that reason, this 2% markup and recovery will not be applicable. So only these three costs, and it has been assumed that there is no markup on transportation cost billed to sister concern. But if you can take a contrary assumption, if you want to take a contrary assumption, you can take a contrary assumption and tell that even sister concern is assumed to be customer, and that particular freight also with GST plus 2%, on that you can multiply 12%. Okay, that is with respect to this. So a lot of other aspects were also covered in this particular question. It's a very good question. It was an RTP question, and they have not tested this, so there are chances, and even they have included it in the new study material. So there are chances of asking this question. Look into the next question, question number 6. Chanakya Academy is registered under GST in the state of Uttar Pradesh. The academy runs the following education institutions: Keshav Institute of Technology, a private engineering college in Ghaziabad. KIT also runs distance learning postgraduate engineering programs. Exams for such programs are conducted in selected cities at centers appointed by the KIT. All the engineering courses, including the distance learning postgraduate engineering program run by KIT, are recognized by law. So which means it will be coming under category 1 or category 2 education institution. Category 2 education institution. Education as a part of curriculum for obtaining a qualification recognized by law. Then number 2, Little Millennium, a preschool in Lucknow. So preschool will be coming under category 1 educational institution. Then Bright Minds, that is education up to 12th standard or equivalent. Bright Minds, a coaching institute in Kanpur. The institute provides coaching for Institute of Banking Personnel Selection Probationary Officers exam. So actually it is not an educational institution. Why it is not an educational institution? Because so this will not be covered under all the three, any of the three category institutions, so it will not be coming there. And then Spring Model, a higher secondary school affiliated to CBSE board school. So school will be coming under category 1 education institution. Now the academy provides the following details relating to expenses incurred. Expenses incurred means what? These are the inward supplies of the education institution, means service provided by education institution or service provided to education institution. It is service provided to education institution by various institutions run by during the period April to September. So we have lot of inward supplies. With the help of the above details, determine the amount of GST payable, if any, ignoring the ITC provisions, on the goods and services received during April to September by various education institutions run by Chanakya Academy. All the amounts given above are exclusive of taxes wherever applicable, and the rate of GST on goods is 12%, catering service is 5%, and on other services it is 18%. Now, we have a matrix of exemption with respect to services provided to education institutions. In that, the first is what? Admission to or conduct of examination with respect to all three category institutions, it is exempted. Then transportation of students, faculty and staff, catering services, housekeeping services, and security services to category 1 institution is only exempted. For this, housekeeping and security services should be within the premises. And next, supply of online educational journals and periodicals only with respect to category 2 institution is exempted. So, here printing services, printing service means it is coming under conduct of examination. So, conduct of examination is exempted for all category institutions. So, KIT is category 2, Little William category 1, Bright Minds is not an educational institution, Spring Model is category 1. So, this 2,50,000 is exempted, and this 1,50,000 will be taxable because it is not an education institution. So, therefore, what is the rate of GST? All other services it will be 18%, goods will be 12%, catering 5 and other service 18%. So, you can see here below other services 18%. So, 1,50,000 into 18% will be 27,000. So, we need to prepare a table like this, and KIT, Little William, Bright Minds and Spring Model, accordingly the amounts we need to take. If it is exempted, we need to write it as exempted. So, here also it is exempted. You can see the presentation here. First you need to write the provision, and then you need to show the presentation like this. Okay. Then also show the computations. So, paper procured for printing the question papers, actually we have exemption only with respect to services provided to education institution. This is supply of goods. For supply of goods we do not have any exemptions. So, therefore, generally we have, but for exam purpose we do not have goods which are exempted unless otherwise given in the question. All the goods transactions will be taxable. Okay. So, here paper procured for printing the question papers will be taxable. So, as it is goods, we will be taking 12%. So, 4,30,000 into 12%, 51,600, 2,58,000 into 12%, that is 30,960, and 3,44,000 into 12%, 41,280. Then honorarium to paper setters and examiners, not on the rolls of the institution. Not on the rolls of the institution means they are not employed. Okay. So, they are not coming under employees, and this will come under conduct of examination. Conduct of examination, all three category institutions it will be exempted. Then rent for exam centers taken on rent like schools etc. for conducting examination. So, for exam centers taken on rent for conducting examinations, so this will be coming under again exempted. So, this will also come under conduct of examination. So, therefore, it will be coming under exempted, and we do not have any taxability with respect to that. Okay. So, that is all three category institutions, but basically Bright Minds is not an education institution. Due to that reason, there it will be taxable. This also, so admission to or conduct of examination only. So, 1 lakh into 18%. So, that is 18,000 will be taken as the answer here. Then subscription for online educational journals. Online education journals only for category 2 it is exempted, and all other cases it will be taxable. And online education journals will not come under goods, it is online. Only printed journals will come under goods. So, online education journals will come under services. So, 80,000 into 18%, 14,400. Then 2,20,000 into 18%, 39,600. Then 2,40,000 into 18%, 43,200. Then higher charges for buses used to transport students and faculty from their residence to the institutions and the back. So, this will be coming under, so transportation of students, faculty and staff, only category 1 is exempted. Only category 1 is exempted. So, this will come under transportation of students, faculty and staff. So, here higher charges means, sir, will we take it as renting of buses? No, we will not bring it under renting of buses, we will bring it under transportation unless otherwise it is given as renting. So because for renting we have an exemption, renting of buses to a person who in turn provides transportation service to category 1 education institution. But basically here it is not about renting, it is higher charges, means we are treating it as transportation. That's what ICI has taken. It's a study material question, it is exempted. Whereas category 2 it will be taxable. So 4,80,000 into 18%, so that will be 86,400, and 1,30,000 into 18%, 23,400. Then catering services. Catering services for running a canteen in the campus. So catering service only for category 1 education institution, it is exempted. Let it be within the premise or outside the premise, it is irrelevant. For catering service we don't have any restriction. So therefore it will be exempted for category 1. In other case it will be taxable at 5%. For catering service rate of GST given is 5%. So 3,20,000 into 5%, so 16,000, and 1,80,000 into 5%, that is 9,000. Then security and housekeeping service, we have a restriction that should be within the premises. That too exemption is only for category 1 and it should be within the premises. If you see here, security and housekeeping services for the institution, security and housekeeping services for spring model include a sum of rupees 80,000 payable for security and housekeeping at the student event organized in a banquet hall outside the campus. So in case of this spring model 4,65,000, they are telling 80,000 is outside the premises, that will be taxable. Whereas the remaining amount 4,65,000 minus 4,65,000 minus 80,000, that will be 3,85,000 is there na, that 3,85,000 will be exempted. So this 4 lakhs will be fully exempted and 6 lakhs will be taxable. 6 lakhs into 18%, 1,08,000, because security and housekeeping service only category 1 is exempted. 3,75,000 into 18%, because it is not an education institution, 67,500. Here actually it is exempted, but that should be within the premises. 80,000 is outside the premises, so into 18%, that will be taxable 14,400. Now if you see the total, of this, so first column total, so that is 51,600 plus 86,400 plus 16,000 plus 1,08,000, that will be 2,62,000 will be the total GST paid. So you can see the answer here, 2,62,000. Same way, next column, that is Little Millennium, only one activity is taxable, so 14,400, and next everything is taxable there, 27,000, 30,000, 960, then 18,000, 39,600, 23,400 and 9,000, then 67,500, that will be 2,15,460. Then last 41,280 plus 43,200, then 14,400, 98,880. So this 14,400, 2,15,460, 98,880. So this is what the answer is. Now suppose if they are asking compute the net GST payable, simple. So first you take KIT. KIT's outward supply will be exempted. So as the KIT's outward supply is exempted, they cannot take ITC on their inward supplies. Same is the case of Little Millennium. So because any service provided by an education institution to its students, faculty and staff is exempted. So KIT's outward supply exempted, Little Millennium outward supply is exempted, Spring Model outward supply is exempted. So they cannot take ITC on inward supply. But Bright Minds is not like that. Bright Minds is a coaching center. Their outward supply will be taxable. So they can take ITC on their inward supply. But remember, out of these all inward supplies, catering service, outdoor catering is a blocked credit. Outdoor catering they cannot take ITC unless the inward supply, outward supply in the same category. So we don't have any information related to that. So therefore, due to that reason, so we will consider it as a block credit. So except 9,000. So in this 2,15,460, except 9,000, remaining amount 2,06,460 can be taken as credit. But here the question is only about computation of GST paid on inward supplies. So this is about question number 6. This is on exemptions related to education services. Then question number 7. Question number 7, Mr. Mahendra Sharma, an interior decorator registered at Ahmedabad, Gujarat, provided service to one of its clients, XYZ Company Limited, registered at Pune, Maharashtra. The provision of service was completed on 10/8 and the payment was entered in the books of Mahendra Sharma on 11/8. So when the service got completed 10/8 and the payment received was entered in his books on 11/8. With effect from 16/8, applicable GST rate was increased from 5% to 12%. So the change in rate is with effect from 16/8, 5% to 12%. However, payment for the service received was credited in his bank account on 17/8 and the invoice for the same was raised on 23/8. So here payment was credited in his bank account on 17/8 and invoice was raised on 23/8. Mr. Mahendra Sharma claimed that he is liable to pay GST 5%, but the department took the view that he is liable to pay GST 12%. Examine the correctness of Mr. Mahendra Sharma's contention and determine the time of supply and applicable rate of tax as per statutory provisions. Now first we need to see whether the payment, this is a case of change in rate of tax. In case of change in rate of tax, we need to check whether the payment is credited within 4 working days from the change in rate. What is the change in rate? 11/8. 11/8 or 16/8? 16/8 there is a change in rate. So the date on which there is a change in rate is with effect from 16/8. Okay, change in rate is from 16/8 and payment is credited on 17/8. As the payment is credited within 4 working days from the change in rate, we need to take the date of payment. So change in rate. So change in rate in this case the change in rate is on 16/8. 16/8. And what will be taken as the date of payment? Date of payment will be date of entry in the books or date of credit in the bank account, whichever is earlier. What is the date of entry in the books? So the date of entry in the books is 11/8 and credit in the bank account 17/8 if the payment is credited within 4 working days from the change in rate. So therefore we will be taking date of payment as 11/8 and date of invoice given here, the date of invoice is 23/8. Date of invoice 23/8 and date of completion 16/8, date of payment, date of completion also you take, date of completion. When is the date of completion? 10/8. So now whether the completion is before change in rate or after change in rate? Before change in rate. As the completion is before change in rate, the time of supply will be invoice date or payment date, whichever is earlier. So which is earlier, 11/8 or 23/8? Which is earlier? So 11/8 will be earlier. As on 11/8 the old rate is only applicable because the rate has changed from 16/8. Therefore rate is 5%. The rate, applicable rate will be 5% in this case. So Sharma claimed that he is liable to pay GST at 5%. That is true. So contention of Mr. Sharma is correct. Mr. Mahendra Sharma is correct. Then would your answer undergo any change in the above case if the payment was credited to the bank account on 14/8 instead of 17/8? So even then the payment is credited within 4 working days. Even before the change in rate itself the payment got credited. So we will take the same way, entry date or credit date, whichever is earlier. So date of payment will be still 11/8 only and there is no change in the answer here. So other things remain the same, the time of supply and applicable will remain the same. Now a slight change in this. What if the change in rate, okay, in this case is 16/8 and the payment got credited. So instead of 17/8, if it is given as 25/8, if the payment is credited on 25/8, what would have happened? If the payment is credited on 25/8, the date on which payment is credited will be taken as the date of payment. So because the payment is not credited within 4 working days from the change in rate, so in that case, if date of credit, see this is a different part, okay. So it's not given in the question, I am just changing. If date of credit is 25/8, then what will happen? Date of payment will be 25/8 only because the payment is not credited within 4 working days. The date on which the payment is credited in the bank account will be taken. So 25/8 and the date of invoice, what will be taken as the date of invoice? Same, 23/8 and the date of completion will be 10/8. So as completion is before change in rate and we need to take invoice or payment whichever is earlier. So therefore invoice date we will take so as time of supply. So time of supply will be 23/8. As on 23/8 there is a change in rate. So new rate will be applicable, therefore the rate will be 12%. That should be taken in this case, okay. Then next one. So this is about the change in rate related question. So the last attempt that they have asked a question on change in rate was November 2020. So there is a possibility of asking a question like this. Then next one, question number 8. Alpha is a manufacturer and supplier of machine in India. Gamma of USA helps Alpha in selling the machine by identifying the client in USA, that is Beta, who wants to purchase this machine, and helps in finalizing the contract of supply of machine by Alpha to Beta. So Alpha is a manufacturer in India, Gamma is a agent. Basically what that agent is doing is identifying a client, so Beta, to purchase this machine and helps in finalizing the contract between Alpha and Beta. Gamma charges Alpha for a service of locating Beta and helping in finalizing the sale of the machine between Alpha and Beta, for which Gamma invoices Alpha and is paid by Alpha for the same. Determine the place of supply of the service provided by Gamma to Alpha. First we need to understand here there is an exemption. That exemption is if you are an intermediary in India. Basically, who is an intermediary? Intermediary means the one who connects the person, supplier and the recipient in a transaction, the one who arranges or facilitates the transaction between two parties is called as a intermediary. So means there is a main supply, there is one main supply and there is one ancillary supply. The one who is doing that ancillary supply connecting the main supply is known as intermediary here. So what is a main supply? I am talking about the exemption. So there is a seller outside India, seller of goods outside India, buyer of goods outside India. You are an intermediary in India. You are connecting that seller and buyer, thereby you are getting a commission. That commission earned by the intermediary in India is exempted. Sir, what is the place of supply in case of intermediary services? Here, intermediary services, if you take section 12, that is intermediary in India and is recipient also in India, then place of supply is determined under section 12, which is as per general provisions. Location, B2B means location of recipient, B2C means location of recipient in the records of supplier, otherwise location of supplier. If you take section 13, so as per section 13 for intermediary services, the place of supply is location of supplier. Now the example what I was discussing is supplier of goods outside India, recipient of goods also outside India and the intermediary in India. Now we need to determine the place of supply as per section 13 and location of supplier will be taken as place of supply, but this activity is exempted. But that exemption is not applicable here. Why that exemption is not applicable here? If you see, Alpha is the seller, Beta is the buyer, but Alpha is in India. If Alpha is outside India, Beta anyhow outside India, if Alpha is also outside India, so then definitely there will be exemption in this case. As Alpha is in India, that exemption is not available. Okay, then so to whom the Beta is raising, that Gamma is raising invoice? So Gamma of USA, so actually Gamma is outside India and Alpha is in India. So therefore that exemption is completely not applicable here, moreover, because I am talking about an intermediary in India, but here the intermediary is outside India. So here the supplier is Gamma outside India and the recipient is Alpha, the recipient in India. So therefore in this case section 13 and it's an intermediary service, place of supply will be location of supplier will be taken. Okay. So as per section 13, the place of supply for intermediary services will be location of supplier. Intermediary means what? So intermediary means an agent or a broker or any person who arranges or facilitates the supply of goods or services or both or securities between two or more persons, but does not include a person who supplies such goods or service or both in his own account. And we have got a circular in this regard as to what is the meaning of intermediary. So there should be minimum of 3 parties and 2 distinct supplies. Okay, so 3 parties and supplier and recipient and one ancillary, one main supply and one ancillary supply should be there. Intermediary service provided to have the character of a agent, broker or any other similar person, does not include a person who supplies goods or services on his own account, and subcontracting or outsourcing will not come under intermediary services. So these are the points given in that circular. Resultantly, in this case, this person Gamma satisfies the meaning of intermediary and the place of supply will be location of supplier, that is USA. Supplier USA, place of supply also USA, there won't be any GST in this case. Supplier USA, place of supply also USA, there won't be any GST. GST is not applicable in this case. Okay. Then question number 9. This question number 9 is related to place of supply. So already they have asked a question like this in Jan 21 exam. So for 9 marks they have asked. So only we need to write about the place of supply. We don't have to comment upon the nature of supply. Determine the place of supply along with the reasons in the following cases. Mr. X, an architect in Kolkata, provides interior decorator services to Mr. Y of New York, USA in relation to his immobile property located in New Delhi. So first we need to identify what is a service. Service is service in relation to immobile property. Section 12 or section 13. So who is the supplier architect and who is the recipient outside India? So section 13. Supplier in India, recipient outside India, section 13. For the purpose of section 13, in case of service in relation to immobile property, always location of immobile property will be taken as a place of supply. So what is the immobile property location? Immobile property in New Delhi. So New Delhi immobile property will be taken as the place of supply. Then you need to write the reasoning. Okay, how you interpret it, the same way you need to write. So you need to write as per section 13 of IGST Act, the place of supply in case of service in relation to immobile property will be location of such immobile property. In the present case, as the immobile property is in New Delhi, the place of supply is New Delhi, like that. Okay. Then next number 2, Mr. A chartered accountant registered in Kolkata, supplies services to his client in Bhubaneswar, registered in Bhubaneswar, Orissa. So chartered accountant service, we don't have any specific provision, so we need to apply general provisions. Section 12 or 13, 12, because chartered accountant is in India and the recipient is also in India, section 12. So we need to take general provisions B2B or B2C. It is B2B because a client is registered in Bhubaneswar, Orissa. So that will be taken as a place of supply, location of recipient, that is a registered place. Then number 3, ABC Limited of Patna imported certain goods from XYZ Incorporation of USA. The goods were imported through vessel and the delivery of goods was taken at Kolkata, whereafter the movement terminates and the goods are stored. So this is a case of import of goods. In case of import of goods, always the place of supply will be the location of the importer, not location where the goods are imported. So what is the location of importer? Patna. So that will be taken. It is not the place where they are importing it. Then number 4, Mr. X registered in Guwahati has availed landline services from BSNL. The telephone is installed in the residential premise in Kolkata and the billing address is office of Mr. X in Guwahati. So in case of telecommunication services, section 12 is applicable in this case because the telecom operator BSNL is located in India and Mr. X is also in India, section 12. In case of fixed line services, the location where it is installed will be taken. It's a fixed line. Location where it is installed in residential premise in Kolkata. So Kolkata will be taken as the place of supply. Then Mr. X residing in Chennai is traveling with Indian Airline aircraft and is provided with movie on demand service for ₹100 as on-board entertainment during Delhi-Chennai leg of a Bangkok-Delhi-Chennai flight. So in case of services on board a conveyance, section 12 or section 13, the provision is same. The starting point of the conveyance will be taken. So service on board a conveyance, here it is section 12, for section 13 also same provision. Starting point of the conveyance starts where? Bangkok. So Bangkok will be taken as a place of supply. Then 6, Mr. X of Kolkata purchased online tickets for Aquatica water park in Mumbai in case of admission to an event or place. So for section 12 or 13, the provision is same. The location where the event is situated or the place is situated will be taken. Where the place is situated, Aquatica water park in Mumbai. So Mumbai will be taken as a place of supply. Then Mr. Z, an unregistered person of Kolkata, sends a courier from New Delhi to his friend in Chennai, Tamil Nadu, while he was on a trip to New Delhi. So in case of transportation of goods, so we have an amendment here, transportation of goods, section 12. So because the person who is sending the courier is in India and courier agency is also in India, so therefore section 12, B2B location of recipient, B2C. So starting point of the goods always. Okay, previously we have India to outside India ending point, otherwise starting point, now nothing like that. Always it will be starting point. For section 13 it will be general provisions. So here what is the starting point of the goods? So send a courier from New Delhi, that New Delhi will be taken as the place of supply because it's a B2C transaction, because the recipient is unregistered. Then 8, Mr. X, a registered person in Ranchi, Jharkhand, buys shares from a broker in Patna on NSE Mumbai. Determine the place of supply of brokerage service. For brokerage service, again it is like an intermediary service only. Section 12 general provisions, location of recipient will be taken. So recipient is Ranchi, Jharkhand. So Ranchi, Jharkhand will be taken as a place of supply. Then last one, XYZ Limited, New Delhi entered into contract with Indian Airline for the supply of biscuit packets for further supply by airline to passengers in Kolkata Guwahati route. The biscuits were loaded on board in Lucknow. So here it is, so it's not about supply of goods on board conveyance, they are not asking. So what is the place of supply in case of sale of biscuits by the airlines to the passengers? Sale of biscuits by airlines to passengers is the location where the goods are loaded. So that is Lucknow will be taken. But here it is 10(1)(a), supply involves movement of goods. So ending point of the goods will be taken. So here wherever they are loading, there only we will be delivering. So Lucknow will be taken as the place of supply. But don't apply the provisions related to supply of goods on board a conveyance, it is. So supply involves movement of goods. And we have an amendment now in case of supply involves movement of goods. So in case of unregistered person, B2C, so location of recipient in the records of supplier, otherwise location of supplier. Okay. That is about this question number 9. See the next question, question number 10. Binaka Electronics Limited, hereinafter referred to as BEL, is engaged in manufacturing televisions. It is registered in the state of Haryana. It has appointed distributors across the country who sell the televisions manufactured by it. The MRP printed on the package of a television is 12,000 rupees. The applicable rate of GST on television is 18%. So the MRP is 12,000, but that is not necessary to be the price at which they sell the television, and the rate of GST on television is 18%. BL dispatches the stock of televisions to distributors ordered by them on a quarterly basis. So the first paragraph talks about BL is a company which is engaged in sale of electronics. So they will be selling TVs to their dealers on a quarterly basis, and MRP is 2000, MRP is 12,000 and the rate of GST 18%. In order to promote its sales, the sales head of BL has formulated a sales promotion scheme on 1st April. Under this scheme, BL offers a discount of 10%. So a 10% discount will be given per television on the television supplied to distributors if the distributor sells 500 televisions in a quarter. So it's a pre-supply discount or a post-supply discount? Post-supply discount. First we will sell the televisions to the distributors. Whenever distributor sells more than 500 television, they are eligible for a discount. Okay. So the discount is offered on the price at which the televisions are sold to distributors, excluding all charges and taxes. It appoints Shah Electronics. So this is the sales promotion scheme. Now they are coming to the question. It appoints Shah Electronics, an unrelated party as per GST law, as its distributor in Haryana on 1st April and dispatches 750 televisions on 8th April as stock for the quarter April to June. BEL has sold the televisions to distributor Shah Electronics at rupees 8,400 per television, exclusive of applicable taxes. Shah Electronics has requested BEL for a special packing of the televisions delivered to it, for which BEL has charged 1,200 per television. So for special packing, this is packing as per the request of the buyer. So usually packing as per the request of the buyer will be other expenses, and that is incurred before or at the time of delivery. Therefore it should be included in the value as per 15(2)(c). As per 15(2)(c), it should be included in the value. Shah Electronics so places a purchase order of 1000 televisions with BEL for the quarter July to September. First they gave for the quarter April to June, and next one for the quarter July to September 1000 televisions. The distributor reports a sales of 700 televisions for the quarter April to June and 850 televisions for the quarter July to September. So both the quarters the sales of the distributors is more than 500. The discount policy offered by BEL as explained above is also available to Shah Electronics as per the distributorship agreement. while Shah Electronics reverses the ITC avail for the quarter July to September, it has failed to reverse the input tax credit avail for the quarter April to June. Examine the scenario with reference to section 15 and compute the taxable value. First, we need to write about the provision. As per section 15 subsection 3 of CGST Act, discount given after supply is allowed as deduction provided the supplier issues a credit note linking the relevant invoices and the terms are agreed before at the time of supply and the recipient has reversed the proportionate ITC related to this. Okay, that is a provision. Now, in this case, for April to June quarter, the sales made by Binaka Electronics to Shah Electronics is 750 televisions, and on that 750 televisions, so first we need to arrive at the value. So 8,400 per television, so 750 into 8,400, 63 lakhs, and packing charges needs to be included. Packing charges, so this packing charges 1,200 per television needs to be included. So 750 televisions into 1,200, that will be 9 lakhs, so 63 lakhs plus 9 lakhs, and discount, post supply discount not allowed as deduction here. Why not allowed as deduction here? Because the recipient Shah Electronics has not reversed the ITC for April to June, not allowed as deduction. So therefore we need to take 8,400, that is 63 lakhs plus, so that 750 into 1,200, 9 lakhs, so that will come to 72 lakhs will be taken as the value for April to June. Then for the second quarter July to September, this post supply discount is allowed as a reduction because the recipient has reversed the ITC and the terms are already agreed before the time of supply. For the second quarter, how many televisions? 1000 into 8,400, 84 lakhs, and then 1000 into 1,200, 12 lakhs, 84 lakhs and 12 lakhs, and then discount. What is the discount? 10%. But that 10% discount is on what? That 10% discount is on price excluding other charges and taxes. What is the price excluding other charges? Packing charges 8,400. So on that 10%, so 84 lakhs into 10%, 8,40,000. So 84 lakhs plus 12 lakhs minus 8,40,000, that will come to 87,60,000. That 87,60,000 will be taken as the value of taxable supply. So that is the answer in this case, and we need to write the notes accordingly as to about the post supply discount. In this case it is allowed as reduction, and a credit note needs to be given in this regard, and we don't have the credit note date, that's why we have reduced it. They are asking what is the value of taxable supply for the quarter. So this is the value of taxable supply. Then look into question number 11. Sunshine Private Limited manufactures taxable goods. The company is registered under GST in the state of West Bengal. The company has provided following information in relation to inward supplies received by it in the month of October. So in the month of October, they have received some inward supplies. Raw material X, they can take ITC. Rent of factory building, they can take ITC, it's not a block credit. Raw material Y also they can take ITC. Car purchased for use of the director. Car purchased for use of the director, it is actually blocked ITC. So we cannot take ITC because car is a motor vehicle used for transportation of persons. Capacity does not exceed 13 and it is not covered under the exceptions. So blocked ITC. Consumables we can take ITC. So on all these things we can take. Machinery for being used in the manufacturing process, yes. Raw material Z also we can take ITC. Technical consultancy service for improvement in the manufacturing process, we don't have any restriction, we can take. Import of service on which GST is paid under RCM, we can take ITC. Now these are the 9 transactions. Now whatever ITC that we can take is subject to the condition as per section 41 read with rule 36 sub rule 4. Only the matched ITC, eligible matched ITC can be availed. So what is the eligible matched ITC here? That ITC which is reflected in GSTR 2B we need to take first, matched ITC. So 2B as on which date? 2B as on So 13th or 14th morning, 13th end or 14th morning of the November, we need to see balance in form 2B on 20th October is irrelevant. We will not take, because October month the 2B will be generated after October only. So it is irrelevant. Balance in 2B on 13th November, this is only relevant. And balance in 2B on 20th November irrelevant. So we will not have any change in the 2B. See, basically whatever is, once the 2B is generated, we will not have any change in that. So practically it is stupidity. We will not have any 6,80,000, but they have just given the dates in order to understand which date 2B should be taken. So 2B will be generated by the end of 13th, means 14th morning, we will be able to see that 2B. So therefore, that particular 2B, so as on 13 November is 6 lakhs. But if you see 10,50,000, only 6 lakhs is reflected. What are the invoices that are reflected? Invoices number 1, 2, 3 and 4 are uploaded by the respective suppliers. 1, 2, 3, 4 are uploaded. So 2 lakhs plus 1,50,000 plus 1,30,000 plus 1,20,000. So 4 invoice only, 6 lakhs. This is matched ITC. But from this matched ITC, we need to avail the self-assessed ITC after making adjustments. What is a self-assessed ITC? So 3 things, even though reflected in 2B, we cannot take: blocked ITC, inward supply used for non-business, and inward supply used for exempted. In this, out of these 4, one is reflected in 2B, but we cannot take, ineligible. So what is that? This 1,20,000 we should not take. So matched ITC 6 lakhs. So first we need to take ITC as per 2B 6 lakhs minus 1,20,000 we should not take. Why we should not take? Because it's a blocked ITC, even though reflected in 2B. Then even though not reflected in 2B, we can take some ITC. Which one? GST paid under RCM. So here we have some GST paid under RCM 50,000. So that 50,000 we can take. And ITC pertaining to earlier tax period not taken during that period, we don't have. And ITC reversed during earlier period, re-availed now, that is also not there. So this much will be taken as eligible self-assessed ITC as per section 41. So that is 6 lakhs minus 1,20,000 plus 6 lakhs minus 1,20,000 plus 50,000, that will be 5,30,000 will be availed as ITC. Self-assessed ITC will be 5,30,000. Mainly for that purpose they can ask a question, okay. And compute the ITC that can be claimed by Sunshine in 3B. So in 3B they will take self-assessed ITC filed by 20th November. And here the due date of filing GSTR1 and 3B for the month of October is 11 November and 20 November respectively. Subject to the information given above, all other conditions for availing ITC have been complained. Why they gave this? Because so the person is under monthly filing of returns, so not quarterly, that's why this is given. Subject to the information given above, all the other conditions for availing ITC have been complied with. Also, whether there is any notice issued for the purpose of excess availment of ITC beyond matched ITC. Yes, there is a excess availment of ITC beyond matched ITC, in this case to the extent of 50,000 rupees. So we will get a intimation under Rule 88D. So Rule 88D is an amendment. So whenever the ITC availed in 3B is greater than the ITC as per 2B, so we will be getting an intimation in form GST DRC 1C, okay. 1C we will be getting in part A, and within 7 days we need to give the reply, and as to either we need to accept the difference and pay along with interest or explain. So what is the explanation that we will give? This is GST paid under RCM, we have availed as ITC, and thereafter so it will be proceeded accordingly. So as per Rule 88D, if ITC availed in 3B exceeds ITC as per 2B by prescribed amount or percentage, we will get an intimation in part A, and within 7 days we need to give reply in part B, and based on the reply tax officer will review and validate the claim of ITC. What if this is not a genuine ITC that is taken? Then they will issue notice under 73, 74 and proceed to the recovery accordingly. So that is this. So maybe this type of question can be tested in exam because it has an amendment related to 88D also. We are proceeding into the next question, that is question number 12. Pari Limited of Jodhpur, Rajasthan is a registered manufacturer of cosmetic products. Pari Limited has furnished the following details for a tax period. Details of outward supplies, so they gave some outward supplies, and they gave some details of expenses, means these are basically inward supplies. All the above amounts are exclusive of all kind of taxes wherever applicable. However, we have the applicable rate of taxes also. Assume CGST, SGST and IGST, and this is the opening balance of ITC. What is it we need to compute in this? That is a requirement. Requirement is very, very important in these kind of questions. See the requirement. Compute ITC available with pari limited for the tax period and net GST payable. So we have outward supply data, inward supply data. We need to analyze both, and input tax credit is how much and what is the net GST payable. And first we will see outward supplies. Supplies in Rajasthan. Where is pari limited located? Rajasthan. And supplies in Rajasthan. So this will be interstate. This will be interstate or intrastate? Intrastate. And the second one, supplies to state other than Rajasthan, interstate. And exports under LUT. LUT means no GST. There is no GST. And if you see, even though outward supply there is no GST, export under bond or LUT no GST, but they can take ITC on inward supplies. So we don't have any ITC reversal in this case. Then details of expenses. Suppose if this exports is on payment of GST, we will simply take it as GST, interstate, IGST. So under LUT, so no GST, but ITC will not get affected. All these three are outward supplies which are taxable for availment of ITC. So treated as taxable for availment of ITC. As it is treated as taxable for availment of ITC, so the reversal shall not arise in this case. Okay. Then next one. Details of expenses. Raw material purchased from registered suppliers located in Rajasthan. So intrastate purchases, and can they take ITC with respect to this? Yes, they can take ITC with respect to this. We don't have any restriction. Raw materials purchased from unregistered suppliers located in Rajasthan, no GST. First of all, there is no GST because the supplier is unregistered, and we don't have 9 subsection 4 for all cases except promoter or builder. So therefore, there is no GST in this case. Raw material purchased from Punjab from a registered supplier, so it will be inter, and we can take ITC with respect to this. Then next one, integrated tax paid. This is not actually value, this is integrated tax paid on raw material imported from USA, so it will be deemed inter and ITC can be taken. Consumables purchased from registered suppliers located in Rajasthan, intra, including high speed diesel, excise and VAT paid valuing to 31,250 for running the machinery in the factory. So actually it is inter, and ITC is available only with respect to the remaining portion. So this 1,56,250, we need to take out 31,250. Actually this 31,250 we have not paid GST, so that cannot be taken as ITC. So the remaining can be taken minus 31,250, that is 1,25,000. Then next one, monthly rent for the factory building to the owner in Rajasthan. So monthly rent whatever is being paid, again it will be coming under inward, intra, because in Rajasthan. And monthly rent for the factory building we can take ITC, we don't have any restriction. Salary paid to employees on rolls. So salary paid to employees on rolls, there is no GST. Why there is no GST? First of all, because salary is not a supply, na? Excluded from supply. Premium paid on life insurance taken for specified employees. Life insurance policies for specified employees have been taken by pari limited to fulfill a statutory obligation in this regard. Generally life insurance is block credit, but in this case ITC is available, so it will be an intra-state supply. ITC is available because it is under a statutory obligation. All the above amounts are exclusive of all kinds of taxes, and we have the opening balance. First we will prepare the input tax credit statement. In the input tax credit statement, we need to take separately CGST, SGST and IGST, and there is an opening balance CGST 20, SGST 15 and IGST 15. So we are taking the opening balance. So first statement is ITC, opening balance 20, 15 and 15. Then read the transaction one by one. First transaction, raw material purchase within the state, 1,06,250. So this is intra, so therefore CGST, SGST. So this 1,06,250 1,06,250 into what is the rate of GST? 9%. So that will be 9,562.50 CGST SGST. This is the first transaction. Next, raw material purchase from unregistered, no GST. Raw material purchase from Punjab from registered dealer 1 lakh. So 1 lakh into rate of GST is how much? 18%. So 1 lakh into 18%, 18,000. It will be coming in the IGST column, 18,000. And next one, raw material imported from USA. Directly they gave ITC, that is IGST paid 22,732. So the 22,732 will be taken as IGST credit. And thereafter, the next one, if you see, consumables purchased interstate 1,25,000 into 18%, that will be 22,500. But consumables is intra or inter. So you see this consumables purchased located in Rajasthan. So intra. So when the consumables are purchased from person located in within the state, intra. So CGST, SGST 1,25,000 into 9%, that will be 11,250 and 11,250. Then monthly rent, salary no GST, monthly rent again intra. So 2 lakhs into 9%, that will be 18,000. That is 9,000 and 9,000. So will be taken. So premium paid on life insurance 6,25,000 no GST. So premium paid on life insurance 2 lakhs, again intra, 2 lakhs into 9%, 18,000 and 18,000. So this will be the total ITC 67,812, 67,812.5, 55,732. So here one issue is there. So CGST 20, SGST 15, IGST 15. Okay. So 47,812.5 plus 20,000 will be 67,812.5. Then 47,812.5 plus 15,000 opening balance 62,812. So it's not same 67,812, it is 62,812 and 55,732. So we got the input tax credit. The next is what? Computation of gross liability. What is a gross liability? Directly we have 8,75,000 into 9%, 78,750 and 78,750. And then next one interstate, that is 3,75,000 into 18%, 67,500. And we don't have any LUT payment, so no GST. So minus ITC. So we have two like all the liabilities. First, which credit we need to exhaust? IGST credit we need to exhaust. How much? 55,732 we will adjust against IGST liability. Then CGST. So the credit of CGST SGST is within the liability. So directly we will reduce. So we get the net GST payable. So this is the answer for this question. So this is related to computation of net GST payable. So usually in the first question, so they can ask a question like this, and some more adjustments will also be involved, or separately also they can make a question like 9 marks question, so related to this, that is possible. Then next one, question number 13. Question number 13 is related to rule 43. So availment of ITC on capital goods. So say this, XYZ Private Limited is a manufacturing company registered under GST in the state of Uttar Pradesh, UP. It manufactures 2 taxable products, alpha and beta, and 1 exempted product, gamma. So alpha, beta, gamma are the 3 products that they are making. Alpha, beta and gamma are the 3 products, and on 1st October, well, the product beta got exempted. So 1st October, what has happened? Before 1st October, alpha was what? Alpha and beta was taxable and gamma was exempted. Then with effect from 1st October, what has happened? The product beta got exempted. So beta got exempted through an exemption notification. Exemption available on gamma got withdrawn. So it became taxable, and alpha always taxable, no change in that. The turnover of alpha, beta and gamma in the month of October. So in the month of October they give. So what is the ratio of exempted to total? Turnover ratio, exempted to total, because we need to reverse the ITC accordingly. So what is the exempted turnover? So October month, which is exempted? Beta is exempted. What is exempted turnover? 10 divided by total. So 10 plus 6 plus 9, so that will be 25. So 10 by 25 is the ratio of exempted to total. Now they gave some details. So XYZ Private Limited has furnished the following details. These are the details. What is the requirement? Compute the following: amount of ITC credited to electronic credit ledger for the month of October, and amount of aggregate value of common credit attributable to exempted supplies, GST liability. This is what they are asking. So first we need to know what is the ITC availed for the month, and out of this ITC how much is the common ITC, and that common ITC we need to do the reversal proportionately for exempted to total. First we will see parallelly how much is the ITC available and is it a common ITC. Okay. So will it come under common ITC or not? Common ITC or not, that also parallelly we need to prepare the working note. So working note we will make particulars, ITC availed, common ITC, like the two columns we will make. Machinery U purchased on 1st October, this month only we purchased. Used in manufacturing all the three products, can we take ITC? Yes, we can take ITC. Also it will come under common ITC. Why? Because it is used for all, means it is used for taxable outward supply as well as exempted outward supply. Machinery we purchased on 1st October for being used in manufacturing product alpha and gamma. Alpha and gamma for this month is what? Taxable. So can we take ITC? Yes. Will it come under common ITC? No, because it is exclusively used for taxable. Machinery W purchased on 1st October for being exclusively used in manufacturing beta. In October month, beta is what? Beta is exempted. So beta is exempted means we cannot take ITC, even it will not come under common ITC. Machinery Y purchased on 1st October 4 years ago. 4 years ago it was purchased for being exclusively used in manufacturing beta. 4 years ago beta was what? Taxable. So initially purchased and used it for taxable, means they would have taken ITC at that time itself. So at that time itself they would have taken ITC. Now what they are doing is that from 1st October such machinery will be used for manufacturing gamma. So beta and gamma, beta is now exempted, gamma is taxable, means it become a common. So now you recognize it as common ITC, but don't avail ITC because initially you purchased. At the time of purchase itself it was used for taxable, means at the time itself ITC would have been availed. So now we are using it as common, so just recognize as common ITC. Then machinery Z purchased on 1st October 2 years ago for being used in manufacturing all the three products. So at that time itself ITC would have been availed, just recognize now as a common ITC. So no need to avail ITC because at that time 2 years ago itself we would have taken ITC. Raw material used for manufacturing alpha purchased on 5th October. So alpha is now taxable, so we can take ITC. Raw material used for manufacturing beta purchased on 10th October. So beta is now exempted. October month whatever is purchased we cannot take ITC. Raw material used in manufacturing gamma purchased on 15th October. So gamma is taxable, so we can take ITC. Now what is the ITC avail? This column you do the total. ITC avail 36,000 plus 18,000 plus 27,000 plus 18,000. So that will be coming to 99,000 is the ITC availed first. Thereafter, what is the common ITC? Common ITC, if you see 36,000 plus 72,000 plus 54,000, that will be 1,62,000. This common ITC we need to reverse. Now you may get a doubt. Sir, this 72,000 we need to reverse based on beta and gamma only na? No. See, there is nothing like that. Once you declare something as a common credit, the total common credit will undergo proportionate reversal for the turnover month. So turnover month is October. October, how much is exempted divided by total, like that. Don't see for which machine we have used it and for which product we have used it, like that. We don't have to segregate. So what is the common credit? 1,62,000. So 1,62,000 divided by, what is the monthly ITC? Usually the life of the capital goods, if it is given in the question, we'll take, otherwise we will take it as 60 months. Okay, into what is the exempted turnover of this month? 10 divided by 25. This will be the ITC reverse. So 1,62,000 into 10 divided by 25. So 1,62,000 divided by 60, that is monthly ITC 2,700 into 10 divided by 25, that will be 1,080. Now see this 1,080 we can add as liability. Either 1,080 can be added as liability or we can reduce it from the ITC. Both treatments are same. Okay. So either you reduce from 99,000 or you add it to the liability. So what is the net eligible ITC? 99,000 minus 1080. So 99,000 minus 1080 will be coming to 97,920 is the net eligible ITC. So amount of ITC credited to electronic credit ledger, how much? 99. Aggregate value of common credit 1,62,000. Common credit attributable to exempted supplies 1080. Now GST liability for the month of October. October month, how much is taxable? 9 lakhs and 6 lakhs. 15 lakhs is taxable. So 15 lakhs into, what is the rate of GST? 18%, 2 lakh 70 minus, how much ITC we have? 97,920. Remaining 1 lakh 72,080 is the net GST payable. So taxable turnover is only 9 and 6, 15 lakhs into GST 18% minus 97,920. So that is the net GST payable from the cash ledger. So this is based on rule 43. Then next one, question number 14. Discuss the applicability of e-way bill in the following cases. Transportation of goods through pipeline like oil, petroleum, gas, water, etc. E-way bill is required because it is goods. Transportation of goods can be by any mode. E-way bill is required, but basically, so pipeline means it's a non-motorized vehicle. As it is a non-motorized vehicle, so we have relaxation from e-way bill. So in this case, e-way bill is not required because it's a non-motorized vehicle. Then movement of petroleum. Petroleum is non-taxable supply or exempted supply. So e-way bill is not required. Transportation of textbooks by a publishing house, textbooks are exempted. So e-way bill is not required with respect to exempted goods. Transportation of cash. So cash is not goods. Cash is not goods. So as cash is not goods, so therefore neither goods nor services. So therefore e-way bill requirement is not there. And then transportation of jewelry items falling under chapter 71. So jewelry items, e-way bill is not required. However, if it is imitation jewelry, e-way bill is required. So sixth one, transportation of imitation jewelry items. For imitation jewelry items, definitely e-way bill is required. Then transportation of used household TV valuing 1 lakh. So used household effects while relocating the house. So if you are transporting some goods, we have relaxation from e-way bill. E-way bill is not required in this case. Transportation of empty cargo containers. Empty cargo containers also e-way bill not required. Imported goods moved from port to inland container depot. So this is under customs control. So therefore e-way bill is not required. Movement of goods for weighment at a weighbridge located 30 kilometers away. So if the weighbridge is within 20 kilometers only, e-way bill not required. If the weighbridge is beyond 20 kilometers, so e-way bill is required. Only for 20 kilometers we have a relaxation. And that too, it should be intrastate movement within 20 kilometers up to weighbridge, then only e-way bill not required. So here it is 30 kilometers, so definitely e-way bill is required in this case. Then next one, question number 15. Super Liver Limited is engaged in manufacture of taxable electronic goods. Its two manufacturing units are located in Mumbai and Nagpur, and both the units are registered under GST in the state of Maharashtra. So they are having two units. Where is Super Liver Limited located? So we don't know, but it has two units, one in Mumbai, another in Nagpur. Both are actually registered under GST in the state of Maharashtra. So both are in the same state, but both are separately registered. Then the company has another manufacturing unit in Bengaluru, registered under GST in the state of Karnataka, and a retail showroom located in Ahmedabad, registered under GST in the state of Gujarat. Now compute the value of supply most beneficial made by Bengaluru unit as well as the value of supply made by Ahmedabad retail showroom with respect to transfer of goods by these two units to Messrs Equilibrium Sales, Messrs Paridhi Sales and Messrs Dara Enterprises if Super Liver Limited furnishes the following additional information for the month of October. So what has happened here is that, so Bangalore unit has appointed Messrs Equilibrium Sales as its sole selling agent. So sole selling agent will be treated as related person. So in case of principal agent transaction, generally we apply rule 29. But when it is a sole selling agent, we need to apply rule 28, not rule 29 for sole selling agent. Messrs Equilibrium Sales sells the electronic goods of Bengaluru unit under the invoice issued in its own name. Okay, let it be. The Bengaluru unit transferred the goods costing 7,25,000 to Equilibrium Sales on 20th October, which were sold by Equilibrium Sales on 31st October at 7,65,000. On 20th October, another electronic goods manufacturer supplied the goods of the like kind and quality to Messrs Equilibrium Sales as the one supplied by the Bengaluru unit at a price of 7,75,000. So, the 7,75,000 will be taken as the open market value. But we have an alternative. What is that? If the goods are sold by the related person to an unrelated buyer, 90% of the resale price can be taken. So, here what we will do, 7,65,000 into 90%, that will be 6,88,500. So, 6,88,500 also can be taken. But if you observe here, what is happening is that 7,65,000 into 90%, 6,88,500. So, the goods which are sold to Equilibrium further sold to an unrelated person into 90%. So, what is the price at which these goods are further sold? 7,65,000 into, so 90% is 6,88,500, or the open market value. What is the open market value? 7,75,000. So, at the option of the supplier, at the option of the supplier. So, at the option of the supplier, here what is the option? Definitely they will go for 6,88,500 only will be taken as the value of supply in this case. Then next. So, why can't we take this? So, 20th October only the sale is happening. In the answer it is given as like kind and quality, but actually it should be open market value. Okay. Then second one, the retail showroom at Ahmedabad transfers goods costing 85,000 to its agent. So, goods are sold to an agent. Messrs Paridhi Sales on 12th October. Messrs Paridhi Sales sell such goods on 18th October at rupees 5 lakhs under the invoice issued in the name of retail showroom at Ahmedabad. So, the retail showroom in Ahmedabad transfers goods costing 85,000 to its agent Messrs Paridhi Sales on which date? 12th October. Paridhi Sales sells such goods on 18th October at 5 lakhs under the invoice issued in the name of retail showroom at Ahmedabad. On 17th October, Paridhi Sales has sold goods of like kind and quality as the one supplied by the retail showroom at Ahmedabad to an unrelated customer at 4,70,000. The retail showroom at Ahmedabad also transfers goods costing 95,000 to its agent Dhara Enterprises. So, we will see up to this. Up to this, it is a principal agent transaction. Now, whether the agent is acting on behalf of principal or not, Paridhi Sales sells such goods on 18th under the invoice issued in the name of retail showroom at Ahmedabad. So, which means the agent is not raising invoice in its own name, but the agent is raising in the name of the principal. So, which means, so we will not take here rule 29. So, when rule 29 will be applicable? Only if it is principal agent transaction. So, retail sales Ahmedabad transfers goods costing 85,000 to its agent Paridhi Sales is not a supply. So, directly the invoice is raised to the customer under the invoice issued in the name of retail showroom. Okay. So, therefore, in this case between principal and agent there is no supply, there is no supply. 7(1)(c) will not be applicable. Then there is only one supply by the retail showroom at Ahmedabad. But see the question. So, determine the value of supply made by Bengaluru unit as well as made by Ahmedabad retail showroom with respect of transfer of goods by these units to Equilibrium. Equilibrium determined. Paridhi Sales. Paridhi Sales is not a supply. The next one is Dhara Enterprises. So, next one. The retail showroom at Ahmedabad also transfers goods costing 95,000 to its agent Dhara Enterprises on 15th October. Dhara Enterprises sells such goods on 20th October at 1 lakh under the invoice issued in its own name. Own name means it is supply under 71C, supply under section 71C, and it will be coming under rule 29, like a principal agent transaction. So we need to take on 19th October, Dara Enterprise has sold the goods of like kind and quality as the one supplied by retail showroom at Ahmedabad to an unrelated buyer at 98,000. So what will be taken as the value in this case? Usually we will take open market value or 90% of the resale price. What is the open market value in this case? So retail showroom at Ahmedabad transfers goods costing 95,000. So on 15th October, do we have any transaction here? No, we don't have any transaction. Why? Open market value should be on the same day. So Dara Enterprise is selling, okay, that is irrelevant. Has sold the goods of like kind and quality. So no, 19th October. So on 15th October, we don't have any transaction. Now, what we need to do is that 90% of the resale price, 90% of the resale price, but there are two resale price. 15th October, Dara Enterprises sell such goods on 20th October at 1 lakh under the invoice issued in its own name, and to unrelated buyer like kind and quality goods that you take 98,000. So both resale price, but again which is lower will be taken. So 98,000 into 90%, that is 88,200 will be taken in this case, 88,200. Why don't we take 1 lakh into 90%? So that is the higher value. So the lower value will be taken 98,000 into 90%. So that is how we need to determine the answer for this. So this is purely based on the valuation rules. Look into question number 16. Examine whether the suppliers are eligible for composition levy under section 10 in the following independent cases in the beginning of the financial year 2022-23. Technology Enterprises registered in Jalandhar, Punjab is engaged in manufacturing and supplying computer systems. Its aggregate turnover in the financial year 21-22, that is previous year, is 125 lakhs. Where are they located? Punjab. And they are engaged in manufacturing and supplying computer systems. So Punjab, the applicable limit will be 150 lakhs, and they supply the computer systems manufactured by it within the state of Punjab only. So they are making intra-state supplies. With a view to expand its business operations, it will also start providing the repair service of computer systems in Punjab in the financial year 22-23. They can offer composition scheme during 2022-23, but the services by way of repairing of computers should not exceed 10% of turnover during previous year, or 5 lakh, whichever is higher, that is 12.5 lakhs worth of services only can be provided. Okay. So they are eligible for composition scheme because previous year aggregate turnover does not exceed 1.5 crores, and during the current year they can provide service up to 10% of turnover during previous year, or 5 lakhs, whichever is higher. Therefore 125 lakhs into 10%, 12.5 lakhs. If they provide repair services beyond 12.5 lakhs, they are disqualified from the composition scheme. Then B, Messrs. Siddharth & Sons, registered in Delhi, owns a restaurant, Tasty Foods, with a turnover of 112 lakhs in the financial year 21-22. In view of growing customer demand, it will also start intrastate trading of juices in Delhi from financial year 22-23. So 112 lakhs in the financial year 21-22. So that is the turnover. So means previous year the aggregate turnover does not exceed. In the view of consumer demand, it will also start intrastate trading of juices, no issue. So 150 lakhs, they can definitely go for composition scheme. So current year they can go for composition scheme as previous year aggregate turnover does not exceed 1.5 crores, and they are into supply of food and even trader, so they can. Then see, Sitaram Associates, registered in Sikkim, is engaged in running a restaurant chain, Veg Kitchen, in the state. It has a turnover of 73 lakhs in the financial year 21-22. In the financial year 22-23, it decides to shut down the food chain owing to huge losses being incurred in the said business. Instead, it will start providing intrastate architect services. No, architect services is not covered under 10.1, only 10.2a. In this case, composition scheme is not possible under section 10.1, and 10.2a also not possible because their turnover during the previous year exceeds 50 lakhs. So because previous year, if you see, their turnover was 73 lakhs, means it exceeds 50 lakhs. So it is not possible. That's the answer for this. As the turnover in the preceding financial year is more than 50 lakhs, 10.2a is not possible. 10.1 is not possible for other than being a manufacturer, trader or supplier food service provider. Then D, Deepti Services Limited, registered in Uttarakhand, is exclusively providing intra-state hair styling services. It has a turnover of 34 lakhs. So it does not exceed 50 lakhs. Will your answer be different if they provide intra-state supply of beauty products along with providing hair styling services? No, they can be making both services as well as supply of goods, and they can be into 10 to A provided their turnover during previous year does not exceed 50 lakhs. So in this case, as the turnover during previous year does not exceed 50 lakhs, current year they can opt for composition scheme, and even under 10 to A they can be supplying goods as well as supplying the services, any services, no restriction, but they should not make interstate supplies, or they should not make supply of services through e-commerce operator, etc. Then next one, question number 17, Element Private Limited, Coimbatore, Tamil Nadu, exclusively manufactures and sells product X which is exempt from GST via notification issued under relevant GST legislations. The company sells product X only within Tamil Nadu and is not registered under GST. So they are selling a product X which is exempt, so and that too it is made within the state of Tamil Nadu. Further, all the inward supply of company are taxable under forward charge, so they don't have RCM liability, so compulsory registration is not applicable. The turnover of the company in the previous year was 45 lakhs. Whatever may be your turnover, if you are making only exempted supplies, you are exempted from registration. The company expects the sales to grow by 30% in the current year. The company purchased additional machinery for manufacturing X on 1st July. The purchase price of the capital goods was 30 lakhs exclusive of GST at 18%. However, with effect from 1st November, the exemption available on X was withdrawn. So far they were making exempted supply, and now they started making taxable supply with effect from 1st November as the exemption is withdrawn, and government has imposed GST at 12%. The turnover of the company for the half year ended 30th September was 45 lakhs. Examine the above scenario and advise Element Private Limited whether it needs to get registered under GST. As per section 23, a person who is exclusively making exempted supplies is exempted from registration. However, as and when their exempted supply become taxable, so and their aggregate turnover has exceeded the threshold limit, they are liable to get registered as and when their exempted supply become taxable, and they need to make application for registration within 30 days from the date when they are liable to register. In this case, already they crossed their turnover, okay, and on 1st November what has happened is that exemption was withdrawn, means within 30 days from 1st November. Within 30 days from 1st November means by 1st December they need to make application for registration, because already for the half year by 30th September the turnover exceeds the maximum threshold limit, that is 40 lakhs. So 40 lakhs is the maximum threshold limit that is applicable for a person exclusively engaged in supply of goods. So that is what we need to write as the answer for the first part. Then second part, if the answer to above question is in affirmative, advise Element Private Limited whether it can avail input tax credit on the additional machinery purchased exclusively for manufacturing X. Actually 18(1)(a) or 18(1)(d) is the confusion. 18(1)(a), a person is liable to get registered and he makes application for registration within 30 days. So then he can take ITC on closing stock under 18(1)(a), but he cannot take ITC on capital goods. Whereas under 18(1)(d), when the exempted supplies become taxable, so then he can take ITC on closing stock as well as on capital goods before the date of conversion. But actually here this person is not already registered. Now only he is getting registered. As now only he is making application for registration, so 18(1)(d) will not be applicable, only 18(1)(a). Under 18(1)(a), so this person cannot take ITC on the capital goods. So 18(1)(a) is only applicable. So they cannot take ITC on capital goods, they can take ITC only on inputs as such held in stock, inputs in WIP held in stock and inputs in FG held in stock. And to take this ITC they need to file ITC 1 within 30 days from the date they are getting registered, they are liable to get registered. So that is the answer for this question. Then question number 18, Mudit Enterprises, registered in the state of Maharashtra, Mumbai, is engaged in supply of various goods and services exclusively to persons notified under section 51. 51 is TDS. So I am making supplies to notified recipient covered under TDS. calculate the amount of TDS to be deducted by the recipient, if any, from the details given below of 3 independent contracts for the month of November 2020. Contract 1, place of supply Mumbai, registered place of recipient Mumbai. So total contract value 2,75,000 inclusive of GST. Now what is the rate of GST? 12%. Take out 2,75,000 into 100 divided by 112. So that is 2,45,000. As the contract value does not exceed 2,50,000, so in case of contract 1, TDS is not applicable because we have a threshold limit for TDS. The total value of supply under the contract should exceed 2,50,000 excluding GST. But here excluding GST it is just 2,45,000, it does not exceed 2,50,000, therefore TDS is not applicable. So therefore on the payment TDS is not required to be deducted. So first, for applicability of TDS we need to check the contract value. Once TDS is applicable, the TDS is deducted only on the payment that is remitted. Then second contract, place of supply Mumbai, recipient also Mumbai, total contract value including GST 3,10,000, 3,10,000 into 100 divided by 112, that will be 2,76,000, which is more than 2 lakhs, and payment due in November is 60,000. So payment due in November 60,000. So as the contract value exceed 2,50,000, so on the 60,000 TDS will be applicable. And what will be the rate of TDS? 1%. So 60,000 into 1% towards CGST and 1%. This 60,000 is exclusive GST. What if it is inclusive of GST? Take out GST and then compute TDS 1%. So therefore 60,000 into 1%. So that is 600 CGST and 600 SGST is the TDS. And it is intrastate supply. How do you know that it is intrastate supply? Simple. So Mudit Enterprise registered in the state of Mumbai, Maharashtra. Recipient also Maharashtra. Place of supply also Maharashtra. So definitely it will be intrastate supply. Then look into third contract. So location of supplier Maharashtra and location of recipient Delhi. So it is what? Interstate supply. Mudit Enterprises is engaged in supply of various goods. So supplier is Maharashtra and place of supply is Mumbai. So it's a intrastate supply. Supplier Maharashtra Mumbai, place of supply also Mumbai, therefore it is intrastate supply, intra. But where the recipient is located, recipient is in the other state. So TDS cannot be deducted because it's an intrastate supply, 1% CGST, 1% SGST, but the recipient in Delhi cannot deduct 1% towards SGST of Maharashtra. Due to that reason, TDS is not applicable in this case. So proviso to section 51 lays down that when location of supplier and place of supply is in a state which is different from the state or union territory of the registration of recipient, there will be no TDS. Since the location of supplier and place of supply in Mumbai and the state of registration of recipient is Delhi, so no tax is liable to be deducted in the given case on the amount of 1,20,000. Then next one, question number 19. Starcart Limited owns and operates a web portal in the name of Starcart and is registered with the jurisdictional GST authorities. It's a latest CA Institute study material question and there are chances of asking this question because on e-commerce transaction it is. So Starcart is a company which is located and they are operating a web portal, means basically they are a e-commerce operator registered in Delhi and is liable for TCS under section 52. Starcart provides listing service to various sellers for selling the goods to ultimate customers. Besides this, Starcart also sells its own products through the same web portal. So they are selling their own goods, also they are permitting the goods belonging to other person to sell it through their platform. But remember, only when they are selling the goods belonging to others through their platform, TCS is applicable. When they are selling their own goods through their platform, TCS is not applicable. For listing services provided to sellers, Starcart charges a listing fee at the rate of 10% of the turnover of goods sold by the seller in a particular month. Such listing fees is recovered from the seller irrespective of any return of the goods sold through Starcart. So they get a listing fee. How much is the listing fee that they will get? 10% of the turnover of goods. The customers can choose from wide range of goods listed on the web portal and place an online order for the goods. The payment is made by customers through the payment gateway in online mode only. At the time of monthly settlement, StarCart makes a payment to the seller after adjusting the TCS at the applicable rates. So payment will be collected from the customers by the e-commerce operator. All these are conditions for TCS. So in case of TCS, it should not be covered under 9(5) and the supply should be through e-commerce operator. E-commerce operator should be required to collect the money from the customer, and it should be taxable supply. Like that, lot of conditions are there. The invoice for goods sold on StarCart is issued by the seller in the name of customers, and the tax is charged on the basis of location of seller and customer. The goods are shipped directly by the seller to the customer, and there is no responsibility of shipping the goods on StarCart for such third party sellers. In case of return of goods, so what is this? The invoice for the goods sold on StarCart is issued by the seller in the name of the customer. The tax is charged on the basis of location of seller and the customer. So invoice is not raised by StarCart. The goods are shipped directly by the seller to the customer, and there is no responsibility of shipping on the StarCart for such third party sellers. In case of return of goods, so here they have given next paragraph, in case of return of goods. So what happens in case of return of goods? In case of return of goods by the customer, the shipping is arranged by the StarCart and it charges a fee equivalent to 20% of the value of goods. So first for sale 10%, for listing. Again in case of return, for handling that return, 20% of the value of goods returned as cancellation charges and refunds the balance amount to the customer, plus as they are doing this handling, further 10% of the value of goods returned is collected by the seller, from the seller by the StarCart as handling charges. In case the product is sold, they get 10%. In case the product is returned, they get 30%. Okay. In the month of January, so far what we have read is the knowledge of their business. Now we are seeing the question. In the month of January, Pulkit, a resident of Rajasthan, purchased the following goods from StarCart: laptop having a value of 50,000 and a printer having a value of 10,000. So Pulkit, Rajasthan, purchased goods from StarCart, laptop having a value of 50,000 and printer having a value of 10,000. Both these products are sold by Infocom Limited, a seller listed on StarCart and registered under GST in the state of Uttar Pradesh. So who is the seller? Seller is Infocom Limited. Where are they located? Uttar Pradesh. Where is the recipient located? Pulkit of Rajasthan. So it's a interstate supply. Okay, it's a interstate supply, and on 50,000 and 10,000, who will pay GST? That seller, Infocom Limited, will pay. Then what is the liability on StarCart? They need to pay GST on the commission, listing fees they get, plus they are also required to pay the TCS. Okay. Then next, mobile phone having a value of 30,000 sold by StarCart in its own capacity. Now in that case, what is the liability on StarCart? StarCart is only raising invoice. So on this 30,000, they need to pay GST. And where is StarCart located? StarCart is located in Delhi, but the Pulkit is located in Rajasthan. So again interstate. CCTV camera system having a value of 1 lakh sold by Secure World, listed on StarCart and registered under GST in the state of Gujarat. So Secure World is in Gujarat and they are making sale to Pulkit of Rajasthan, interstate. Now on this 1 lakh, GST is payable by Secure World, but on StarCart they need to pay GST on the listing fees, plus they need to pay TCS. Now all the amounts given above are exclusive of GST wherever applicable. The opening balance of input tax credit for the relevant tax period for StarCart, Infocom and Secure World is nil, means they don't have any ITC. Further, there is no other inward or outward supply transaction for StarCart, Infocom Limited and Secure World in January apart from the aforementioned transactions. Subject to the information given above, assume all the other conditions necessary for availing ITC have been fulfilled. GST is applicable on all inward and outward supplies at the following rates: CGST 9, SGST 9, IGST 18, but here only IGST is applicable. Compute. So this is the requirement. Compute the net tax liability including the amount collected as TCS. So what is the net GST payable including the amount collected as TCS of StarCart Limited, and net GST payable in cash after set off of credit, if any, of Infocom Limited and Secure World for the month of January. So we need to compute their liability. So first we will see what is the GST liability of Starcart Limited. So Starcart Limited, if you see, so what is their GST liability? Total there are 3 transactions only. So we will see the GST liability of GST payable by Starcart. Okay. So what is the GST payable by Starcart with respect to the first transaction? So they have only commission, that is listing fee. Listing fee. So what is the first transaction listing fee? So that is 50,000 and 10,000, that is 60,000. 60,000 into 10%, so they get 10%. 60,000 into 10%, okay. And on that, what is the rate of GST? Let's take 18%, because the rate of GST given here is CGST, SGST, IGST 18%. So that will be their first liability. So 60,000 into 10%, 6,000 into 18%, 1,080. Then next, this is for the first transaction. For the second transaction, they need to pay GST on sales. So what is the sales that they are making? They are making a sale of mobile 30,000. So on that 30,000 they will pay GST 18% fully. So it's not on commission, 18%. So 30,000 into 18%, 5,400. Then again, with respect to the third transaction, they need to pay GST on the listing fee. So what is the value of that third transaction? 1 lakh. Out of that 1 lakh they get 10%. So 1 lakh into 10% into 18%, that will be 1,800. So this is their liability. 1,800 plus 5,400 plus 1,080, that will be 8,280 is their liability, plus TCS. What is the TCS payable by Starcart? What is the TCS payable by Starcart? So with respect to the first and third transaction only. So Infocom first transaction 60,000. On that 60,000, 1% will be TCS 600, and the other transaction is of Secure World 1 lakh into 1%. So Secure World, that transaction 1 lakh into 1%, so that comes to 1,000. So 1,600 will be TCS. Now what is the first question? The first question is, what is the GST payable? Compute the net tax liability including amount collected as TCS of Starcart Limited. So Starcart Limited liability is how much? So 8,280 plus 1,600. 8,280 plus 1,600, 9,880 will be taken as the total liability. So you can see here the total GST liability including TCS of Starcart for January is 9,880. Then the next part of this question is that, so next one, how much is the GST payable by Infocom Limited? Simple, Infocom Limited will pay GST on the sale value. What is the sale value? 50 and 10, 60,000. And whatever GST that is paid by Starcart on the commission, these people can take ITC. So 60,000 into 18%, that is 10,800. And on 6,000 they will pay some GST now, who? Starcart. That will be recovered from Infocom. So Infocom can take ITC with respect to that. What is that? The first transaction we have seen 1,080. This can be taken as ITC by Infocom. So what is Infocom gross liability? 60,000 into 18%, 10,800 minus 1,080, that is 9,720. 9,720. And even TCS, whatever TCS that is deducted by the e-commerce operator can also be taken as credit. What is the TCS? So TCS is 600. This 600. So therefore minus 600, that will be 9,120 is the liability of Infocom. Same way Secure World. Secure World outward supply is what? Secure World outward supply is 1 lakh. On 1 lakh GST will be 18%, 18,000 minus whatever the GST on commission, that is 1,800, they can take as ITC. And even TCS, deducted can also be taken as credit minus 1000. So 15,200 will be taken as the liability of secure world. Okay, so this is how, and maybe extra points also they can be adding into this question. So but this is how, the same question also can be tested, because this is a coined question by ICI. So in the study material, new study material or updated study material, they have given this. Now look into question number 20. Arpit, registered in Tamil Nadu, has opted for QRMP scheme, quarterly return monthly payment scheme, for quarter 1, that is April 21 to June 21 of financial year 21-22, and its total tax liability, that is cash liability, for the said quarter was 1 lakh. Arpit continues under QRMP scheme for quarter 1, July to September, and gives the following details. So previous quarter, that person was under QRMP, and what was their liability? 1 lakh, and he continues under QRMP, and the self-assessed tax liability is 40,000, and for August 10,000, September 70,000. That is their actual liability, which is paid on respective dates 31/8, 10/10 and 11/11. Now they are asking 3 questions. Question number 1, case A. Interest if self-assessment method of payment opted for month 1 and month 2 of quarter 2. So month 1 and month 2, if they are going for self-assessment method, if they are going, they will actually compute their liability 40 and 10, that they have to pay by when? This 40,000 for July, they should have paid by 25th of August, but they are paying on 31st August, so there is a delay by 6 days. So for that 6 days, interest will be payable on 40,000. 40,000 into 18% is the rate of interest, into 6 by 365, that will be 118.35, 118 rupees will be the interest for July. And August month, they have to pay by 25th of September, but they are paying on 10th October. So which means that there is a delay. So by 15 days, how? 5 days in September and 10 days in October. So therefore 10,000 rupees into 18% into, so 15 divided by 365, that will be 73.97, 74 rupees will be taken as the interest. Then for September 2021, self-assessed tax liability 70,000. So definitely that 70,000 only they have to pay, and that should be paid by when? So Tamil Nadu means the due date of filing 3B will be 22nd of October, but when are they making? Like 11th November. So in October, 31 minus 22, 22nd October is the due date. So 9 days delay in October, and November 11 days. So therefore 20 days delay on the 70,000. 70,000 into 18% into 20 divided by 365, that will be 690.41. So 690 rupees will be taken as the interest. So total interest will be 882 rupees will be taken as the interest. So that, in case A, the person is required to pay. Okay. Then case B, suppose if fixed sum method of payment is opted for month 1 and month 2, what would have happened in that case? So fixed sum method, previous quarter liability into 35% will be taken as the fixed sum method liability. What is the previous quarter liability? 1 lakh. So 1 lakh into 35% is what? 35,000. So 35,000 rupees is payable by when? 25th of August. But when are they paying? 31st of August. So for 6 days, we need to compute interest on 35,000. So 35,000 into 18% into 6 divided by 365, the interest will be 103.56, 104 rupees. Same way, August month 35,000, that should be payable by 25th of September, but they are paying on 10th October. So therefore 15 days delay, again interest 35,000 into 18% into 15 divided by 365, that will be 258.9, that is 259 will be taken. Whereas now the differential amount is there, that is for July month 40,000 is the actual liability, but how much is paid? 35. So there is a difference of 5. And for August 10,000 rupees is the actual liability, but how much they have to pay? 35,000. So now what you need to do is that see the actual liability. What is the actual liability? This is under fixed sum method na. So see the actual liability, 40 plus 10 plus 70, 40 plus 10 plus 70, that will be 120 minus what is already paid under fixed sum method? 70. So what is the remaining? 50. So that 50 they have to pay by 22nd of October. Now they are paying it on 11th November. So which means that interest will be for 20 days on 50. So 50 into 18%, 50,000, okay, 50,000 into 18% into, so 20 divided by 365, that is 493.15, 493 rupees will be taken as the interest. So this is in case of fixed sum method is opted. Now what if fixed sum method is opted for month 1 and self assessment method is opted for month 2? Now again from the beginning, for the first month fixed sum method means how much is the liability? 35,000. But when is it paid? Paid on 31/8 means this 104 rupees will be the interest, no doubt. Then for August month what is the date? So 10th October they are making payment, but they are going for self assessment method. So 15 days delay. So on 10,000 rupees, 15 days delay, 74 rupees will be the interest. Whereas in case of third month, so third month we need to see the difference. What is the difference? That difference is 40,000, 10,000 and 70,000. So this is total 40 plus 10 plus 70, okay, minus how much is already paid for first month and second month. For the first month we are making payment of 35,000, second month 10,000, so remaining 75,000. So that 75,000 into 18% into delay is 20 days, 20 divided by 365, that is 739.7 to 740. Now this will be the total interest that will be payable. And there is one more interest also here. What happens for July 2021? So fixed sum method is 35,000, but what is their actual liability? 40. On the difference amount, whether there is any interest payable? Yes, that interest is payable till the date they are, but here we don't have that information, that way we are not computing, but maybe in exam they can. So this is a question which I have coined, so possible like this, but not I have coined, somewhere I have taken this question, and but in exam they will give more clarity, but I am just telling you. So on this 5,000 rupees there will be a differential interest which is payable, because now fixed sum method there won't be any problem, self assessment method only the problem will happen. So fixed sum method 40,000, so they are going for 35,000, means on the difference no need to pay interest. But under self assessment method if it is 40 and if we are paying 35, then on that 5,000 it will have. So but in this case we don't have that interest, okay. Next, that is about this question number 20. Let's proceed to the next question, question number 21. Happy Company is a registered supplier of electronic goods. It has 3 stores for electronic goods in Jodhpur, Rajasthan, namely Ram Store, Sham Store and Mohan Store. Where are these 3 stores located? In Rajasthan. It receives order for supply of electronic goods worth rupees 1,40,000 exclusive of GST at 18% from Kishan Sons of Bhopal, Madhya Pradesh. Happy Company found that order worth rupees 43,000 can be fulfilled from the company's Ram store, order worth 45,000 can be fulfilled from its Sham store, and remaining goods worth 52,000 can be sent from its Mohan store. So they got a single order, but the goods are being sent from the 3 different stores, and all 3 stores are instructed to issue separate invoices for the goods sent to Kishan Sons. The goods are transported to Kishan Sons in Bhopal in a single conveyance owned by Shiv Transporters. Even though there is like single conveyance, but these are considered as 3 different consignments. Why it is considered as 3 different consignments? Because there are 3 separate invoices now, because of which these are considered as 3 separate consignments, and for each invoice a separate e-way bill is required. So as per CBIC FAQ, you are required to advise Happy Company with regard to issuance of e-way bill as per the provisions of CGST Act. So all the e-way bill provisions are given in Rule 138. Remember this rule number, Rule 138 of CGST rules. So what is it they are telling? E-way bill is required if the value of consignment including the GST exceeds 50,000 rupees. All transactions involving movement of goods, whether it is supply or not, in case of consignment value exceeds 50,000, and every registered person causing movement of such goods should generate the e-way bill. So here consignment value of the goods shall mean value determined in accordance with the provisions of section 15 declared in an invoice, bill of supply or a delivery challan, and GST should be included. So while calculating this 50,000 rupees, GST inclusive of value should be considered, and here as 3 consignments, each invoice shall constitute a independent consignment. So as there are 3 invoices, there will be 3 consignments, and what is the value? If you see, first value is 43,000 excluding GST 18%. So 43,000 plus 18%, 50,740. Then 45,000 plus GST 18%, 53,100, 61,360. All these 3 consignment values including GST exceeds 50,000. So e-way bill is required. So in all these 3 cases. And what if one consignment, if the value does not exceed 50,000, say for example this is exactly 50,000, and these are not goods sent on job work or handicrafts, e-way bill not required for this invoice, this consignment, by the person who is causing movement of goods. But all these consignments are carried in a single carriage. So when all these consignments are carried in a single carriage, even though individual value does not exceed 50,000, cumulatively its value will exceed 50,000. So then the transporter should generate the e-way bill independently with respect to each consignment, and again a consolidated e-way bill also should be generated. So that is with respect to this 3 consignments, 3 separate e-way bills is required. Then question number 22, DF Limited exported goods valued 50 lakhs and received refund of IGST amounting to 9 lakhs on 16th August 2020. He could not realize the export proceeds to the extent of 25 lakhs, but did not realize, so he could realize only 25 lakhs, which means out of 50 lakhs, 50% is only realized, but did not realize the balance export proceeds within the prescribed time limit of 9 months, and he applied for extension of time limit to RBI. So there is a condition that you need to realize the proceeds within the time limit under FEMA, that is 9 months, and suppose if you are not able to realize the proceeds within the time limit under FEMA, you have to voluntarily pay within 1 month on expiry of that 9 months. So along with interest, otherwise it will be recovered along with interest and penalty, and you can request the RBI for extension of time limit. So that extension could be for a further period of 6 months. In that 6 months time, suppose if the RBI gives any extension, so in that 6 months time you are bringing the proceeds. Now whatever refund either you have paid or recovered from you by the government or department, so you will be able to get it back. Okay, so that is a provision. So in this case what has happened, he has applied for extension of time to RBI. There is no dispute about the supply of the goods as regards quality, time of supply and fulfillment of terms and conditions of sale. He wants to inform him, he wants you to inform him of the consequences under GST law in case RBI does not give him the extension. In case RBI is not giving him the extension, what will happen? So that's what. As the proceeds are not realized within the time limit under FEMA, within 30 days after the expiry of the time limit, we need to pay back the refund along with interest at 18% from the date we got the refund till the date we are making payment of that. Say this, where an applicant has received the refund of integrated tax paid on export of goods but could not realize the sale proceeds within the time limit prescribed under FEMA, so that is 9 months, shall deposit the amount so refunded along with interest 18% within 30 days from the expiry of the said period to the extent of non-realization of proceeds. Here what is not realized? So 50% not realized now means 4.5 lakhs. 4.5 lakhs needs to be paid along with interest at 18% within 30 days from the expiry of prescribed time limit. However, if RBI writes off the requirement of such realization on merits, recovery shall not be made. Otherwise, within 30 days, if this person has not made the payment, then what will happen? Then so the amount will be recovered in accordance with the provisions relating to recovery of erroneous refund. So we have 7374 demand and recovery will be applicable even with respect to refund, erroneous refund. So that will be initiated and then the penalty will be accordingly payable. So this is the answer for question 22. Question 23, Prithviraj Limited registered under GST in Uttar Pradesh is served a notice for audit by the tax authority under GST law on 10th July. So a notice has been given for department audit. The records and other documents as sought by the tax authority have been made available by Prithviraj Limited on 25th July. So 25th July he made the documents available. The tax authorities visits the office of Prithviraj Limited located in Noida, Uttar Pradesh on 8th August for conducting the audit. Determine the time limit within which the audit under section 65 department audit is required to be completed, assuming that no extension is permitted. So what is the time limit within which the audit should be completed? 3 months, and it can be extended for a further period of 6 months. So 3 months plus 6 months, but here there is no extension, means 3 months from the date of commencement of audit. Now what will be taken as the date of commencement of audit? Date of commencement of audit means the date on which records are made available, or actually the institution of the audit at the place of business of the taxpayer, whichever is later. Just because department is coming, we should make the documents available to them now. So therefore, what is the date on which documents are made available? 25th July. And what is the date on which they are visiting our premises for conducting the audit? 8th August. Whichever is later, so whichever is later will be 28th August. So from 8th August, so it should be completed within 3 months. What if they come earlier and thereafter we made available the documents? Whenever we have made available the documents, that will be taken as the commencement of audit. From there, the 3 months will be counted. Then question number 24. Zebrix, registered in Delhi, enters into a contract with Shine Limited, an advertising company located and registered in Gurugram, Haryana, to arrange the display of an advertisement of Zebrix newly launched product on a hoarding placed in Marine Drive, Mumbai, Maharashtra for initial 3 months of the launch of the product. Shine Limited in turn enters into a contract with the owner of the seaside hotel located and registered in Marine Drive, Mumbai, Maharashtra for display of the advertisement on the hoarding placed in the lawn of the hotel. What will be the place of supply of service provided in the given case? Actually, this is a question from RTP May 24, and in this question, so this question is based on the latest circular related to place of supply. So what is that CBIC circular says? Whenever we are taking the hoarding on rent, so nothing else, just the hoarding is taking on rent. So and we pay money for the place, like we pay money for the hoarding as we are taking it on rent. So that particular service will come under service in relation to immobile property. Already someone has taken the hoarding on rent and we receive the services of advertisement on the hoarding, sale of space for advertisement, etc. Then it will be coming under general provisions. Now what happens here is that Zebrix, registered in Delhi, enters into contract with Shine Limited, an advertising company located and registered in Gurugram, Haryana, to arrange the display of advertisement of Zebrix newly launched product on a hoarding which is placed in Marine Drive, Mumbai. So the contract between the Shine Limited advertising company and Zebrix is what? Display of advertisement. Okay, it's not renting of hoarding. Okay, display of advertisement on the hoarding. So for a initial 3 months of the launch of the product, Shine Limited is an advertising company. In turn enters into contract with owner of seaside hotel located and registered in Marine Drive, Maharashtra for display of the advertisement on a hoarding placed in the lawn of the hotel. Usually this is how the contracts will happen, because what is the advantage of this model is that, so usually advertising companies will first take the hoardings on a rental basis because they will pay rental throughout the year, but the advertisement on that particular hoarding need not be throughout the year. So that may be depending upon 1 day or 2 months or 3 months, like that we will be. So the advantage of this to the property owner is that whether any particular advertisement is displayed or not displayed, they get a fixed rent. And the advertising company will in turn enter into contracts with multiple parties. So by sharing the same hoarding at different points of time to different people. Okay, that is the business model. Now there are two supplies. Supply number one between the advertising company and that product company Zebrix. So that will be coming under sale of space for advertisement or advertisement services. So general provisions, section 12 subsection 2, location of recipient B2B, B2C location of recipient in the records of supplier, otherwise location of supplier will be taken. Whereas the next supply between the property owner or the seaside hotel and the advertising company, that will be coming under service in relation to immobile property. For that service in relation to immobile property, we need to take section 12, location of the property, and property is in India only. So, location of property will be taken as a place of supply. So, there are two supplies involved. One is services provided by Shine Limited to Zebrix by way of arranging the display of advertisement. Second is service provided by Seaside Hotel to Shine Limited by way of placing a hoarding in the lawn of the hotel. Now, the place of supply in each of the above supplies is as follows. So, first case we need to determine based on general provisions, and the location of recipient will be taken. Therefore, the place of supply in the given case is the recipient location Delhi will be taken, Zebrix location. Second, sale of space or supply of right to use the hoarding, that will come under service in relation to immobile property. Location of immobile property, where the immobile property is located, Marine Drive, Mumbai, Maharashtra. So, that will be taken as the place of supply. So, this is based on a latest CBIC circular. So, this question can be directly be asked in exam. It's a very good question, and also they have given it in RTP May 24. The next question is also given in RTP May 24. Bindusara commences the business of supplying taxable goods locally within the state of Rajasthan in April. So, Bindusara is making intra-state supplies. He is not yet registered under GST, as his aggregate turnover reaches 8 lakhs by the end of the month of June. Bindusara starts exploring the option to sell the goods supplied by him within Rajasthan on a popular e-commerce platform, eVastu store, by listing the goods on the said platform. Okay. So, his aggregate turnover reaches 8 lakhs by the end of the month of June, and Bindusara starts exploring the option to sell the goods through e-commerce platform. We have one point. As per section 24, a person who is supplying goods through e-commerce operator is compulsorily required to get registered. But in that regard, we have a relaxation. What is that? If that person's aggregate turnover does not exceed threshold limit, they are not compulsorily required to get registered, but they should follow certain conditions. Number one, they should not make interstate supplies. In this case, Bindusara is making supplies within Rajasthan. Number two, they should not make interstate supplies through e-commerce operator. Directly they should not make interstate supplies through e-commerce operator. And in the portal, so they should be updating their address, permanent account number, and they should obtain a unique enrollment number. And using that unique enrollment number, which is obtained in a state, will be valid in other states also. So, this unique enrollment number should be listed with the e-commerce operator, and then only they can make supplies through the e-commerce operator. And as and when their aggregate turnover exceed the threshold limit, so they need to cancel this unique enrollment number and get a normal registration. Okay. So, then they can make interstate supplies and all. So, here Bindusara approaches you for advice on the following issues in this regard. A. Bindusara wishes to continue his business without registering under GST, since it will enhance the compliance burden under GST law. Can he supply the goods through eVastu store without obtaining GST registration? You are required to advise him. Yes, they can supply goods through e-commerce operator without obtaining GST registration. So, even though a person who is making supply of goods through e-commerce operator who is liable to deduct TCS under section 52, that supplier is compulsorily required to get registered, but we have a relaxation. If that person is not making any interstate supply, he is not making interstate supplies through e-commerce operator, that is not making supply of goods through e-commerce operator in another state, and such person shall be required to have a permanent account number, and they should declare on the common portal their permanent account number, address and state, and they will be granted an enrollment number, and that enrollment number should be used for the purpose of listing the goods through e-commerce operator. And when the persons are subsequently granted registration, so as and when their aggregate turnover exceeds threshold limit, the enrollment number cease to be valid from the effective date of registration. So, that is this. Second, discuss the GST implications in case Bindusara supplies goods through e-commerce platform eVastu store. So, in that case, what will happen is that, so Bindusara is not registered. So, therefore, the e-commerce operator eVastu store will not be deducting any TCS even though e-commerce operator is required to deduct TCS, but in this case, as the supplier is unregistered, e-commerce operator is not required to deduct any TCS, and he should not allow the Bindusara to supply goods through their platform without having a unique enrollment number, and the e-commerce operator e-Vastu store should ensure that the Bindusara is not making interstate supplies, and all these details should be reported in GSTR 8. So, that is TCS return, even though there is no TCS, but these details should be reported. See this. So, as Bindusara is not required to obtain registration, there shall not be GST implications on supplies made by him through e-commerce operator Vastu store. However, e-commerce operator is required to submit the details of supplies made through it by unregistered suppliers having enrollment number in GSTR 8. Further, no TCS shall be collected by e-Vastu store in respect of such supplies. Then next one, question number 26. So, this is also an RTP question related to specified actionable claims, and we have even the rule 31 B and 31C, newly added rules that we have related to valuation in case of specified actionable claims, that is online gaming, and then even this so some activities like casinos, etc. So, for that we have this question 26. Fortune 365 is an online money gaming platform operating from UAE. It provides its users a platform to play and win money in different games that are available on its portal. So, basically it is an online money gaming platform. In the month of December, player A, an unregistered person located in India, deposited an amount of 10,000 rupees in the master wallet available on the portal of Fortune 365, inclusive of GST. Subsequently, following transactions were undertaken by player A in the said month. Now, we have one rule related to online money gaming. So, rule 31C. What does this rule 31C says? So, 31B, 31C is for casinos. 31B, what that is says that as per this said rule, the value of supply of online money gaming, including supply of actionable claims involved in online money gaming, shall be total amount paid or payable or deposited with the supplier by way of monies or money's worth, including virtual digital assets. So, how much is the money deposited? This 10,000 will be taken as the value, and as it is inclusive of GST, accordingly GST will be computed. Now, what they are doing with that? Subsequently, following transactions were undertaken by player A in the said month. Player A utilized the amount of 2,000 rupees from the master wallet towards playing a virtual racing game on the portal. As a winning amount, 10,000 rupees was credited to the master wallet of player A. On another portal operated by Fortune 365 in the name of Bet 180, so betting. So, in the online platform itself there is a betting also. So, for betting we have a separate rule, rule 31A. So, in case of betting, the value will be taken as the total bet amount collected. Okay. So, player A placed a bet of face value 11,000 on an international wrestling match. The amount of such bet was paid by the master wallet of player A. However, he lost the bet, and hence the bet amount of 11,000 with applicable taxes was transferred from the master wallet to the bank account of Bet 180. Player A transferred the balance amount from the master wallet to his bank account. So, initially he deposited 10,000, and thereafter, so he utilized 2,000 and he got a winning amount of 10,000. Then again 11,000 rupees he lost, and thereafter the remaining amount, whatever it is, that will be transferred to his bank account after the aforesaid transactions, means he has withdrawn that. Assume that all the above transactions are exclusive of GST unless otherwise specified. Unless otherwise specified as inclusive of GST, we will take it as exclusive of GST. Rate of GST applicable is 28%. So, this is the transactions. Now, based on this information provided above, answer the following questions providing brief reasons. Question number 1. Compute the total GST payable on the aforesaid given transactions. First, there are two activities. One is online money gaming. Online money gaming, the entire amount deposited will be taken as a value. Second is betting. For betting, the face value of the bet, 100% of the amount collected by the totalizer or organizer will be taken as the value. So, accordingly, what is the GST payable in the given transactions? First, value of supply of online money gaming as per rule 32B. So amount deposited, what is the amount deposited? 10,000. So that 10,000 into 28 by 128. Why 28 by 128? Because this 10,000 is inclusive of GST. So 10,000 into 28 divided by 128. So 2,187.5, 2,188 will be taken as the GST. Whereas betting is a separate transaction. For betting, we need to take the total amount collected. What is the total amount collected? 11,000 rupees is the total amount collected, but they have not given as inclusive of GST, and it is given in the question that we need to take it as exclusive of GST. Assume that above transactions are exclusive of GST. So therefore, this 11,000 rupees into 28%. 11,000 into 28% is what? 3,080. So 2,188 plus 3,080. So 2,188 plus 3,080, 5,268 rupees will be taken as the total amount of GST that would be collected by a government on the given transactions. So 5,268 will be taken as the total amount of GST. Understood? So this is how we need to calculate. But remember, just because there is online money gaming, so it does not mean in online money gaming, if you play the game and if you are making the winnings, it's okay. But in that, if there is betting involved, then another rule will come into the picture, that is rule 31A provides a manner of determining the value of supply of actionable claim in the form of chance to win in betting that will be 100% of the value of the bet. Okay. Then second question, determine the net amount transferred by player A to his bank account after the aforesaid transactions. First, how much money he deposited? 10,000. And what is the GST on deposit? 2,188, that will be deducted. 2,188 will be deducted. Thereafter, so he is participating in a racing game na, 2,000 rupees. So 2,000 rupees will be deducted. Then add 10,000 because he got the winning. And then out of that 11,000 rupees he used for bet, and on 11,000 GST 3,080, that 3,080 also gone. 11,000, 3,080. Now what is the balance left? So 10,000 minus 2,188, because GST burden is on him only na. So then that amount will be deducted. Then 2,000 rupees he used for playing the game. So the 2,000 plus he got a winning 10,000 minus he used 11,000 for placing the bet and he lost the bet. But on that bet he need to pay even GST 3,080. So 1,732 is left, that will be withdrawn. Whether this amount withdrawn will be reduced from the GST payment? No. So because the amount is withdrawn, it does not mean there will be reduction in GST. So we have a provision which says that. So in rule 31B, so if the amount deposited is withdrawn, we will not get any deduction with respect to that. Also winning amount will not be added for GST. So here they made a winning of 10,000 na, on the GST is not payable on winning amount. But on the bet value, if they have placed any bet, on that bet amount GST will be payable. Then next, third one, ascertain whether Fortune 365 is required to obtain registration under GST in India. Will your answer be different if player A is registered under GST in India? See, in case of, we have a section 14 capital A, this is an amended section. All this, the entire question is based on amendment, okay. It's given in RTP May 24. So section 14A, which says that in case of online money gaming services provided by a person outside India to any person in India, the liability to pay GST is on the person outside India and they need to get registered. So in India, okay, that is given. So every person supplying online money gaming from a place outside India to a person in India shall be required to obtain registration on a mandatory basis in India. So 365 being a supplier of online money gaming operating from UAE and supplying services in India shall be liable to obtain registration compulsory in India. So section 14A of IGST Act and section 24 of CGST Act, these two sections, okay. Already section 24 is given, even this information is given in section 14A of IGST Act. So the answer will not change, even if player A is registered, so the supplier only will have the liability. It's not like OIDR service, wherein if the recipient is registered, recipient will pay GST, otherwise supplier will pay. It's not like that. Online money gaming by a person outside India, always that person outside India only will pay GST. Then next question, question number 27. Sitaram Industries Limited, a registered entity under GST, in the state of Karnataka is engaged in manufacture and supply of both taxable and exempted goods and services. Following information for the month of October 2023 is provided by it. So these are the various outward supplies, inward supplies, and some special points we have. From the information given above, you are required to compute the eligible ITC available for set off and the minimum net GST payable in cash for the month of October 2023. Provide brief reasons for the treatment of each item. So this is actually a typical 14 marks question. When you get a question like this, what you need to do is that you need to prepare the answer in 4 statements. Okay. So what is the first statement that you need to take is that first you need to take computation of, so analysis, the first statement is analysis of outward supplies, first analysis of outward supplies. So based on that you will know whether it is covered under taxable or exempted, or taxable means FCM or RCM. Okay. So first one is statement showing GST payable on outward supplies. Statement showing GST payable on outward supply. Okay. Statement showing GST payable on outward supplies. Okay. So statement showing GST payable on outward supplies, and here basically what we need to do is that we need to classify whether the transaction is exempted or taxable, and when it will be taxable, again you need to check whether it will be coming under FCM or RCM. If it is coming under FCM, then only you take. If it is coming under RCM, don't add it to the liability. If it is exempted also, there won't be any liability, no liability. GST not payable. Okay. If it is exempted, then don't add it to the liability. No GST on supplier. Then here also RCM means no GST on supplier, whereas FCM means this will be added to gross GST payable. Okay, like that we need to analyze the outward supplies, whatever outward supplies that we have. That is statement number 1. And next statement after this, second statement is statement showing inward supplies. Okay, statement showing inward supplies. So here statement showing GST payable on outward supplies, statement showing GST on inward supplies, GST on inward supplies under RCM, inward supplies under RCM. And also parallelly we need to prepare statement showing computation of input tax credit, statement showing computation of input tax credit, computation of input tax credit. So we need to prepare this statement parallelly. So second statement and third statement we need to prepare parallelly. So in that every inward supply you analyze. If that inward supply is covered under FCM, okay, first inward supply is covered under FCM, inward supply is covered under FCM. If it is covered under FCM, means already we are paying GST. ITC available or ITC not available? ITC available or ITC not available? If ITC available, you take it to statement 3. You take it to statement 3. If ITC not available, just you write a note. You don't have to do anything, just write a note. Then suppose if there is an inward supply and that inward supply is covered under RCM, then you first put it under second statement. Thereafter again analyze that ITC available or ITC not available. If ITC is available, then put it in the third statement. Take it to the third statement. If IT is not available, first we need to add it to second statement, plus IT is available, then also add it in third statement. So, 2 adjustments. Suppose if IT is not available, then you do not have to do anything, just give a note that IT is not available, that is sufficient. So, now you prepared the second statement and the third statement. So, the first statement is what? Statement showing GST payable, that is GST payable on outward supplies, second statement and third statement. Now, the fourth statement, the fourth and final statement, that is related to statement showing computation of net GST payable. Statement showing computation, statement showing computation of net GST payable. So, that should be taken as the third statement. So, the fourth statement. In that, what you need to do? First, you need to take gross GST payable under FCM. Gross GST under FCM. Then you need to take second statement, third statement, ITC, input tax credit, input tax credit utilized, input tax credit utilized. Then you need to add second statement. What is that? GST under RCM, GST under RCM. Now, once you do these 3, then it will be known as net GST payable. Then it will be called as net GST payable. So, that is about these 4 statements that we have. So, statement 1, statement showing GST payable on outward supplies, statement showing GST on inward supplies under RCM, statement showing computation of ITZ, statement showing computation of net GST payable. Okay. So, this way we need to present the answer, and thereafter in the statement itself you try to give the notes also to the extent possible. Otherwise, finally below this also we can give the notes. Okay. Now, read the first one. First, we have some outward supplies for which month? For the month of October 2023. And where are they located? State of Karnataka. While analyzing the outward supplies, be careful with respect to CGST, SGST, IGST, because if you see here, they have given CGST, SGST, IGST 9, 9 and 18, means we need to prepare a table. So, in this first statement, how you will present is that first you will take particulars, okay, and after particulars amount, and then here CGST, SGST and IGST. Okay. So, that when you present it this way, so in the particulars itself you can write down the transaction and the note related to the transaction, amount and GST, CGST, SGST, IGST. In the amount column you will write it as exempted. If it is exempted, suppose if it is covered under RCM, you will write it as, so not included in the liability, not included, or you will write it as RCM, taxable under RCM. Suppose if it is FCM, you will take it into the CGST, SGST or IGST. So, this is the statement we need to do. So, the first one is sold an old warehouse building in the state of Karnataka to a retail giant in the same state. So, sale of warehouse building, sale of building is excluded from supply. First of all, this activity is not a supply. So, why? Because sale of land including sale of building is excluded from supply. So, on 30 lakhs there will not be any GST. So, you need to write the note. See the presentation, particulars, value, IGST, CGST, SGST and the particulars, transaction and the note. What is that note? You need to write, whenever you are writing a note, please try to give the reference as much as you can. As per section 7, subsection 2, read with schedule 3 of CGST Act, sale of building is excluded from supply, or sale of land including sale of building where entire consideration received after obtaining completion certificate or first occupation, whichever is earlier, is excluded from supply. Like that you can write. Okay. Then next one, next second transaction, outward supply, supplied 30 laptops over the counter to Mr. Sudhakar, an unregistered buyer who took it to his residence in Haryana. So, supply does not involve movement of goods. Supply does not involve movement of goods. Invoice issued to him mentions only his name and state. However, his complete address of Haryana is missing in the invoice. So, in case when the supply is made to an unregistered person, now we have one place of supply amended provision 10(1)(ca), which says that whenever supplies are made, supply of goods is made to unregistered person, whether supply involves movement of goods or supply does not involve movement of goods, we need to take, so the location of recipient in the records of supplier, otherwise location of supplier, okay, that should be taken. In this case, if you see, so we have the details of his state. So, location as per the address of the unregistered recipient, record in the invoice issued in respect of the supply. So, therefore, in this case, what has happened? Haryana will be taken because we have his details now. So, Haryana, it is missing in the invoice, but invoice issued to him mention his name and state. So, state we know that is sufficient. So, it is a interstate supply. As it is a interstate supply, chargeable to IGST. And here what has happened? Special boxes for packing the laptops is also given along with this. Now, laptop and special boxes for packing the laptops. So, what is it? Is it composite supply or mixed supply? Before that, what is the rate here? So, the rate here, if you see, CGST, SGST, IGST 9, 9 and 18 respectively for both inward and outward supply of goods and service, except special packing boxes for which the rate of GST will be 12%. So, actually this laptop and this will be box will be coming under composite supply. Why composite supply? See, laptop will not be given directly na. So, one box will be used for packing the laptop. So, in the ordinary course of business, it is naturally bundled. All are taxable, naturally bundled in the ordinary course of business. What is the principal supply? Laptop is the principal supply. What is the rate applicable to laptop? 18%. So, that should be taken. So, what is this? 12 lakhs plus 1,30,000. So, that will be 13,30,000 into 18% will be taken. 2,39,400 will be IGST. Then next one, provided direct selling agent service to Kumkum Bank registered in Karnataka. Actually, so this direct selling agent services, we have RCM. So, various agent services, direct selling agent, but direct selling agent should be other than body corporate or firm. But here direct selling agent is Sitaram Industries Limited. So, it will come under FCM. So, this is also FCM and this is also coming under FCM. And where it will be, is it like within the state or outside the state? Within the state, registered in Karnataka. So, intra, and 4 lakhs into 9%, 36,000 CGST and 36,000 SGST. Suppose if it is not Sitaram Industries, Mr. Sitaram, then it will be coming under RCM. So, the bank will pay GST if the direct selling agent is other than body corporate or firm. Then next transaction, D transaction, provided pure labor service pertaining to single residential unit in Mumbai, Maharashtra for erection and installation of renovation works for a client registered in Maharashtra. We have one exemption. That exemption says, so construction of a single residential unit otherwise than as a part of complex. So, if it is a pure labor contract, the entire consideration received is exempted. But is it construction? No. It is renovation or repairs. So, renovation we do not have any exemption. So, it will be taxable. We do not have exemption and it will be coming under FCM. And what will be the place of supply? So, renovation in relation to immobile property na section 12, location of immobile property. Where is the immobile property located? Mumbai. And where the Sitaram Industries located? Karnataka. So, therefore, it will be coming under inter. So, 6,20,000 into 18%, 1,11,600 will be taken. But that exemption point you need to stress. So, generally single residential unit only construction is exempted, repairs or renovation will be taxable, we do not have exemption. And even place of supply also you need to write, that is location of immobile property. Then the next one, provided free of cost training in a resort in Puducherry to its agents based in the state of Karnataka on effective use of the products of the company, open market. So, they provided free of cost training in a resort in Puducherry to its agents based in the state of Karnataka on effective use of the products. So principal agent transaction will come under supply only if it is for goods. Training is services, so it is not a supply. Without consideration means we need to refer to 71C. 71C principal agent transaction is only for goods. Here it is for service. As it is not a supply, we don't have any GST liability. Free training to agents without consideration is not deemed as supply. Okay, so only goods are covered. So services are not covered. So that's why no GST in this case. Next, interest received on fixed deposits from Sulkasan Bank registered in Karnataka exempted. Interest on loans, advances, deposits is exempted. So on this 2 lakhs, we are not required to pay any GST. Interest on fixed deposits 2 lakhs, there is no GST. Then we have some inward supplies. Now inward supplies we will see little later. So if we have any outward supply, that also we need to put it in the first statement. That's why. So the company provided the following additional information. In respect of sale of old warehouse building, stamp duty was paid at 32 lakhs. Why they gave that information? They gave that information for arriving at the value of exempted supplies for doing proportionate ITC. Okay, stamp duty was paid on 32 lakhs. So means even though its actual sale is 30 lakhs, but we need to take the value as 32 lakhs. The company provided a corporate guarantee of 2 crores to Lakshmi Logistics Limited, its related company having registered office in the state of Karnataka, for loan availed by the latter from Jandan Bank Limited, Karnataka. So it's a related company. Corporate guarantee to a related person, we have a special proviso. So under rule 28, which says 1% of the guaranteed amount or the actual consideration, whichever is higher. So what is the guaranteed amount? 2 crores. So 2 crores into 1%, 2 crores into 1% is 2 lakhs will be taken. Supplier is located in Karnataka and its general provisions. So where is that related company located? Karnataka, it's an intra-state supply. So 2 lakhs into 9% and 9% on the corporate guarantee. So 1% of the guaranteed amount or the actual consideration, whichever is higher, that should be taken. Then next, the accountant of the company did not claim input tax rate in respect of debit note received for the reason that original purchase related to earlier years, that is related to inward supply. So these are the various outward supplies. Now if you total this, we will be getting the gross GST liability. So what is a gross GST liability? CGST 54, SGST 54 and IGST will be 3,51,000. Now we are moving on to the next statement. So second statement and third statement parallelly we need to make. First, inward supply. Received a debit note in respect of inward intrastate taxable supply received in the financial year 2021. Okay. So for the quantity difference as agreed, these inward supplies were used for all goods manufactured in the factory. Date of debit note is 16th October. This month only na. So we can take ITC. And for which they are telling the accountant of the company did not claim ITC in respect of debit note for the reason that original purchase related to earlier years. So purchase invoice is irrelevant. We need to take ITC only on the basis of debit note date only. Debit note pertains to this month. So we can take ITC. And this is inward intrastate. Inward intrastate means within the state. So 4 lakhs into 9%, that is 36,000 and 36,000. We have already paid to the supplier. So therefore don't put it in second statement, just put it in the third statement for ITC, 36,000 and 36,000. Then the next inward supply. So it will not come in second statement because we don't have any RCM liability. Solar panels installed in the factory for providing electricity to be used in the factory. So basically, so these solar panels installed in the factory for providing electricity to be used in the factory. So this will come under immovable property. Solar panels are immovable property. Okay. So as it is installed in the factory, so we have a blocked ITC. We have a blocked credit related to this. So see here, solar panels ITC cannot be claimed since they are used by a taxable person for construction of an immovable property. Basically solar panels is a immovable property other than plant and machinery. Okay. Sir, won't it come under plant and machinery? Actually there is a logic which we can take that as plant and machinery, but it is a solar plant, it is coming under plant and machinery, but solar panels, so which is constructed, used on the top of the building, so that may not be taken. That is a view taken by ICI, but actually it is a contradictory point. So we can also consider it as plant and machinery, and ITC can be taken, but as this is the answer given in ICI, please follow that. If it is given as some plant and machinery, then only we will take. So, but solar panels are not considered as plant and machinery. So consequently, ITC is not available. Okay. So that is with respect to this. Then purchased employee uniform for 1000 employees interstate. Uniforms worth 3 lakhs were necessary to ensure the safety of the workers while carrying out the manufacturing activity. So we can take ITC on 3 lakhs. Remaining uniform worth 4 lakhs were sometimes worn by the employees outside the factory for personal purposes, means it is not in the course or furtherance of business. On 3 lakhs we can definitely take ITC without any restriction. ITC on uniforms which are necessary to ensure safety of the employees while carrying out activities available, whereas uniforms not provided for any safety purpose which are being used for personal purpose is ineligible for ITC. So 3 lakhs we can take, interstate 54,000. So this is the ITC 54, 36,000 and 36,000. Now in this, what is the common inward supply? So why? Because we have exempted outward supply also na. So we need to do the computation related to reversal of ITC. So say this, common credit in respect of debit note 36,000, 36,000, and this 54,000 uniforms are being used outside also. So here if you see the question, 3 lakhs were necessary to ensure safety of the workers while carrying out the manufacturing activity. So 3 lakhs into 18%, 54,000. Uniforms worth 4 lakhs were sometimes worn by employees outside the factory for personal purposes. So on that we cannot take ITC, and so these two are common credits. Why common credits? Because they have outward supplies which are exempted also. They have outward supplies which are exempted. What are the exempted outward supply for ITC purpose? Sale of land and sale of building is treated as exempted. So this 32 lakhs will be taken as exempted for the purpose of ITC, plus laptops, direct selling agent, outward supply covered under RCM. We don't have any outward supply covered under RCM, but interest. So interest, even though it is exempted, but for the purpose of availment of ITC it is treated as taxable. Only 32 will be treated as exempted turnover. Okay, 32 will be treated as exempted turnover, 32 divided by total. What will be the total turnover? 32 plus 12 plus 1,30,000 plus direct selling agent 4 lakhs plus pure labor service 6,20,000 plus interest 2 lakhs. Okay, so we need to take 30 lakhs instead of 30 lakhs, 32 lakhs plus 12 lakhs plus 1,30,000 plus 4 lakhs plus 6,20,000 plus interest also will be taken 2 lakhs plus one more 2 lakhs, that is corporate guarantees there na, that 2 lakhs. So 59,50,000. So 54,000 common credit attributable to both taxable and exempted. So proportionately we need to reverse. So 54,000 into 32 divided by 59.5, we need to reverse this ITC. So remaining is the net eligible ITC. That net eligible ITC will be set off against here liability, gross liability. So we get the net GST payable. That's it. So that we can make as a separate statement also, computation of net GST payable. So this is the answer for this question. So this is how the usual 14 marks question will be, involving all these complications. We are moving on to the next question. The next question, question number 28. Mr. Rishi, a registered supplier under GST in the state of Maharashtra, provides the following information for the month of January 2022. Outward supply supplied computers which were purchased from an unregistered supplier. So on their purchases there is no GST. Without any consideration, they supplied the computers to brother-in-law in Ranchi. Market value of the supply was 62,000. First of all, it is not a supply. Why it is not a supply? Because there is no consideration. Without any consideration, will it come under disposal of business asset on which ITC is availed? No, it will not come under that, because first of all they have purchased from an unregistered person, so there is no concept of ITC, and brother-in-law will not come under related. So consequently this activity is not a supply and we don't have to pay GST. So this question is also involving computation of net GST payable, just like the previous question. So the same statements we need to prepare. First we need to prepare the statement showing the GST liability on outward supplies. So computers, you need to write the reasoning and the answer is nil. And next one, second, supplied a consignment of 10 laptops to Messrs NK and Company in the state of Maharashtra at the instruction of third person being Messrs ZX Computers of Tamil Nadu. So they supplied a consignment of 10 laptops to Messrs NK and Company in the state of Maharashtra. So bill to ship to transaction at the instruction of the third person, so being ZX Computers of Tamil Nadu. Now who is the billing address? That ZX Computers is the billing address and NK and Co is the shipping address. Now we will raise invoice. So this is a normal transaction and chargeable to GST under FCM, but we need to know whether it is intra or inter. So where is Rishi located? Maharashtra, and they are raising invoice to ZX Computers of Tamil Nadu as per section 10(1)(b). So the place of supply in case of bill to ship to transaction is the billing address. So therefore it will be coming under interstate, even though they deliver the goods within Maharashtra, but the billing address is in Tamil Nadu, therefore it is interstate, and that 6 lakhs will be chargeable to IGST and the rate of IGST given is 18%, so 1,08,000. Okay, so that is the second one. Next, third, provided stock counting service to Messrs XY Impex registered with GST in the state of Gujarat, whereas the place where the stock counting was carried out was the godown located in Mumbai. So godown located in Mumbai is taken as the place where the stock counting is being done. So stock counting, what should be taken as the place of supply? So here, so whenever the service is provided to a recipient, where are they providing services? To whom they are providing service? XY Impex. XY Impex is having a business in Mumbai, because otherwise how they will have a godown? Godown means they have a place of business in Mumbai. Even though XY Impex is registered in Gujarat, when the person is having place of business in another state, godown in another state, means they need to get registered in the other state also. So we need to take general provisions. Location of recipient, it is not Gujarat as the recipient, it is Mumbai, so therefore it will be coming under intra and it will be FCM only. So 80,000 into 9%, that is 7,200, 7,200. Simple. The recipient is having a godown in Maharashtra, recipient is Gujarat. When they are having a godown in Maharashtra, we know that every person is required to get separate registration in each state from where they have a place of business. They are making taxable supplies, so they have a place of business in Maharashtra, so definitely they need to get registration in Maharashtra. Intrastate supply as a place of supply is the location of recipient. So what is the location of recipient? Mumbai. So I have given the reason. So what is the reason? Here godown at Mumbai being a fixed establishment is the location of recipient. Okay. So but here we don't have any exemption with respect to this. This will be taxable and it will become intrastate. But actually we get confused and we will write it as inter. Be careful with respect to this. Then provided renting service of his service apartment in Mumbai at a daily rent of 1,500 for residential purpose. So renting of service apartment in Mumbai at a daily rent of 1,500 for residential purposes. So renting of residential property for residential purpose. But here the confusion will come when they use the word it is a daily rent. Okay. So see this here. So daily rent will means it's a temporary stay. It's not a permanent stay. Permanent stay will not be daily rent. So since it's renting of residential property for commercial purpose, So why it is considered as commercial purpose? So because it is for a temporary stay, it is considered as commercial purpose. And in case of renting, what will be taken as a place of supply? So location of property, where the property is located. The property is located in Mumbai. Where is this person located? Maharashtra. So therefore it's a intrastate supply chargeable to CGST, SGST. Then next one. So recovery, this is intra and FCM. Recovery agent services provided to Apex Finance Limited, NBFC located in Delhi. So it is coming under RCM. Recovery agent service to bank, financial institution, NBFC is covered under RCM. So liability to pay GST is on Apex Finance Limited, not on this Rishi. So on 2 lakhs there won't be any GST because it is taxable under RCM. Then next one. So advance received during the month for future intra-state supply. So what is this advance? We need little bit details related to this, that we have below some additional points. Mr. Rishi provided the following additional information. Turnover for the previous financial year was 21 lakhs. He had availed services in an inter-state transaction with a taxable value of 4 lakhs and the tax rate of 18%. The transaction was liable to tax under reverse charge. So payment for the same was not made. So they received some interstate transactions, and on that the GST payable will be 4 lakhs into 18%, and the transaction was liable to reverse charge. Payment for the same was not made till the current month, overdue for 180 days. Actually we have one point. If the payment is not made to supplier within 180 days from the date of invoice, so much of the ITC availed needs to be reversed along with interest at 18%. But that particular provision is not applicable in case of supply without consideration, 71C, or supplies covered under RCM, or even payment made to some other person on behalf of supplier. So in case of the transaction which is covered under RCM, this 180 days condition is not applicable. However, tax due under the said transaction was paid to government and credit availed in the month of the transaction itself. So we don't have any treatment related to this. Then out of the 15 invoices as per above, 12 invoices out of 15 invoices as per above, this is related to the inward supply. Apart from the above, so they have some inward supply, their inward supply related point. He has sent goods valued 1 lakh to his job worker in the state of Kerala, who further processed the said goods and made direct supply on 31/1/2022 from Kerala to a buyer in the state of Maharashtra. So right now we are talking about which month? January 2022. So directly it is made to a buyer in the state of Maharashtra. So it is an outward supply. So that 1 lakh will be chargeable to GST, 1 lakh intra, because we need to take not the job worker, the buyer's place. So ending point will be taken. Supply involves movement of goods, ending point, that is a buyer's place. So CGST, SGST 9,000 and 9,000 will be taken. Then next, out of the advance received for future supply, 5 lakhs is related to supply of goods and rest is related to service. So 5 lakhs will be taxable only on invoice basis. So remaining, what is remaining? Out of 9 lakhs, 5 lakhs is on invoice basis, remaining. So 4 lakhs will be chargeable to GST and it is intrastate. So CGST, SGST. So 4 lakhs, CGST, SGST, these two transactions. And that's it. Based on this, we got the gross GST payable. So 54,900, 54,900 and 1,08,000. Now we need to analyze statement 2 and statement 3. What is statement 2 and 3? 2 is RCM, 3 is input tax credit. Now if you see here, inward supply, imported computer accessories from Korea and the goods landed in Mumbai port and reached its registered premises on 31/1/2022. So on this 5 lakhs, customs duty paid and even GST is also paid, that can be taken as ITC. So see here, reverse charge. So import of computer accessories. So it has been assumed the value of imported accessories is inclusive of basic customs duty and social fare surcharge. Only the IGST has been paid. Okay. So therefore, what is the value of the imported accessories? So 5 lakhs, we are assuming that it is inclusive of basic customs duty, because while computing the GST, we need to add basic customs duty, social fare surcharge na. So 5 lakhs into 18%. 5 lakhs into 18% will be 90,000. So 90,000 can be taken as input tax credit. And next, So, but that we will not pay under RCM, that is different. That will be regular, under customs duty we will be paying. Availed GTA service from Messrs P Trans of Kolkata with regard to transport of traded goods where rate of GST 2.5, IGST 5%, and nowhere it is given that the supply is going for FCM. In the absence of information, what is the assumption? GTA services will be covered under RCM. So therefore, on this 1 lakh, GST paid can be taken as ITC. So 1 lakh into 5%, that will be 5,000. But Kolkata, GTA is in Kolkata and where the recipient is in Maharashtra. So therefore, again IGST column 5,000 rupees GTA services. Then next one, apart from the above, received 15 invoices involving IGST of 1 lakh during the current month. Out of these 15 invoices, 12 invoices involving IGST 95 was uploaded by the supplier. So we cannot take 1 lakh, only we can take 95,000 as ITC. Okay, so 95,000. Now if you see this GST under RCM, we need to add it to RCM liability, plus it will also be taken into ITC. So now what are the three ITCs that we have? 90 plus 5 plus 95. 1,95,000 is the ITC that we have, 1,95,000. Now, do we have any outward supplies which are exempted? Outward supplies which are exempted, first one is not a supply, second one, third one, fourth one, and recovery agent services. So, recovery agent covered under RCM, outward supply covered under RCM will be treated as exempted supply for the purpose of ITC. So, we have. So therefore, proportionate ITC we need to reverse 2 lakhs. 2 lakhs, 1,95,000 is the total ITC, 1,95,000 into exempted divided by total. 2 lakhs divided by total turnover. What is the total turnover? First one nothing, next 6 lakhs plus 80,000 plus 30,000 plus 2 lakhs. So that will be 9,10,000. Okay. And then here we have one more outward supply, 1 lakh, that is 10,10,000, and this 10,10,000, but here 19,10,000 is taken, which means this 9 lakhs is also taken into the total turnover. But sir, 9 lakhs, only 4 lakhs worth of invoices we are raising now, and why are we taking 9 lakhs, entire 9 lakhs? So that is an assumption here. So therefore, we are taking entire 9 lakhs. So, but we can also write an assumption that as the invoice is raised only for 4 lakhs, the denominator can be taken as, so instead of 9 lakhs, 4 lakhs only. So therefore, 14,10,000. Okay. So 1,95,000 into 2 lakhs divided by 19,10,000 will be 20,419. Alternatively, if you are not considering 9 lakhs as the total turnover, if you consider only 4 lakhs, because based on time of supply if you take the turnover, but that is not given. So this is actually, there is no clarity in the law related to this. So either we can take, because if you see advance 9 lakhs, out of that advance 9 lakhs, we don't have the clarity as to what will be taken. Okay. So therefore, logically 4 lakhs only should be taken. That's what here. The amount column we have now 6 lakhs plus 80,000 plus 30,000 plus 2 lakhs plus 4 lakhs plus 1 lakh. Okay, 14,10,000. So 14,10,000 only should be taken. So alternatively, based on time of supply, if you take the turnover, then 1,95,000 into 2 lakhs divided by 14,10,000. And the ITC that will be reversed. The ITC that will be reversed will be, so 27,659.5. So 660 will be the ITC reverse. This is the alternative way. Okay. But according to me, this will be more correct than 19,10,000. But in exam, you can follow any of these two. But I prefer this only. But ICS study material, many places, they have taken even advance also, entire advance collected also, they have taken as a part of the turnover. Even though the time of supply is at a different date, but they have taken advance received, means it's part of their turnover in that month itself they have taken. So this is as per ICI, but this is my view. But for your exam purpose, please follow ICI view but also write this alternative way in the note below. Okay. Then next, so once you utilize this, so the remain like set off the reverse it, the remaining ITs available for utilization 1,69,581. So now what is the GST liability, gross GST liability? 5400, 5100, 1,08,000. First fully 1,08,000 we use. Thereafter we can use it for payment of CGST, SGST, and GST payable under RCM we have to always pay. So this 48,219 and 5,000 will be taken as the net GST payable in cash. The next question, question number 29. The details of transactions of J Limited, Vadodara, Gujarat, a registered taxable person during the month of February 2022 are as under. So we have got various transactions here. We need to segregate whether it is outward supply or inward supply, and assume CGST and SGST rates are to be 9% each and IGST to be 18%, excepting the ITC received as a merchant exporter, they gave something. So ensure that all the items in the table are covered in your answer, provide supporting explanation. So they are asking us to compute, so what is the admissible ITC and the GST liability. Okay. So we need to prepare this in the same way. So first we will analyze the transaction, and accordingly we know where we need to consider that. First, purchased goods from a manufacturer in Maharashtra as a merchant exporter. So it's an inward supply, it's an inward supply as a merchant exporter on payment of 0.1% IGST. This 0.1% IGST can be taken as credit, and exported the same directly to an importer of Spain under LUT. Yes, the outward supply should be under LUT. FOB value 7 lakhs. Invoice for the supply of J Limited was received on 5/2 and the payment was made on 8/2. So with respect to this transaction, it will have two adjustments. One, in the outward supply, it is export without payment of GST. So therefore, we will just put it and we will not be having any liability. It will be zero rated. So without payment of GST, because being a merchant exporter, so we will procure the inputs at the rate of 0.1% GST, and that 0.1% GST can be taken as ITC. You can see here. So that 0.1% can be taken as ITC. So how much is the purchases? Purchased from a person in Maharashtra. This person is in Gujarat, then 0.1% IGST. So therefore 7 lakhs into 0.1%, that is 700, will be taken as the IGST credit. So it should come in statement 3, that is statement showing computation of input tax credit. So statement 1, statement showing computation of gross GST payable, and second statement, statement showing computation of gross GST payable under RCM. First one is FCM, third statement is input tax credit, and finally computation of net GST payable. Then next, second transaction, imported goods from China with CIF value of 5 lakhs, and these dates are given here to convey that these transactions covers in February month. Okay. Imported goods from China with CIF value 5 lakhs, the goods were sold for 5,10,000 as high C sales to an Indian party on 21/2/2022. So this sale is on high seas and it will be not taken into supply, it will be excluded from supply, and so there here we will not be including the aggregate turnover, high sea sales to an Indian party, it is excluded from supply, but we are importing the goods now. So whenever we are importing the goods, so CIF value 5 lakhs, as the said goods are sold on high seas basis, we will not clear. Who will clear? The subsequent person will clear. When the subsequent person clears, he only will pay the customs duty involved including IGST, and he will take credit. So it will not come in input tax credit as well. So this transaction will be completely out of the computation. Then number 3, purchased goods from a party in Taiwan, sold the goods to a party in Turkey without bringing the goods to India. So outside the country purchase and outside the country movement of goods. Purchase value was 5 lakhs and the sale price was 7 lakhs. J Limited paid sales commission of 50,000 rupees to Mrs. T, their agent, in connection with this transaction. The transaction was completed in the 3rd week of February. The figures in rupees have been given after conversion to transaction was in convertible foreign exchange. First, this transaction will not be supply. because so sale of goods to a party in Turkey outside the country movement of goods. Outside the country movement of goods will not be taken, okay, and they are making payment to their agent na. So that activity of the agent is exempted. Why? Because we have an exemption with respect to IGST. There is an intermediary in India who is connecting the seller outside India and the buyer outside India, and the commission received by that intermediary will be exempted. So purchased goods from a party in Taiwan, sold goods to a party in Turkey, and for which J Limited paid a sales commission of 50,000 to Mrs. T, their agent, in connection with this transaction. So intermediary services, see here. So intermediary service agent for purchase of goods. So usually where is that intermediary located? Intermediary, that is Mrs. T, their agent, in connection with the transaction, and the figures in rupees have been given after conversion, though transaction was in convertible foreign exchange. Next. So number 4, J Limited has agreed to provide technical services to Mr. K of Ahmedabad, who is an unregistered person, in connection with the manufacturing operations to be undertaken by him for a consideration of 5 lakhs, and has received an advance of 1 lakh for the same on 2/2. So services, technical services, 1 lakh received as advance, and so Mr. K of Ahmedabad, an unregistered person, let it be. So it's a interstate supply or intrastate supply, intra, because Gujarat and Ahmedabad is also in Gujarat only, it's an intrastate supply, and GST payable on the advance. So in the outward supply you can see advance received, so 1 lakh into 9%, 9,000 and 9,000, okay. And next one, it has imported raw material from China. CIF value of the goods for the purpose of customs included 1 lakh as ocean freight paid by J Limited. The value for the purpose of levy of IGST worked out by customs was 6 lakhs. They have imported the raw materials and 6 lakhs is the value. Clearance took place in 4/2, so this can be taken as credit. So 6 lakhs into 18% GST, so 9,48,000 will be taken, import of goods na. So 6 lakhs into 18%, 1,08,000 will be taken as input tax credit. Then locally purchased taxable material stored in the factory got spoiled due to rainwater in the factory and became unusable. J Limited claimed and received insurance amount of 60,000 for the same. Value of raw material at the time of receipt was 70,000. Raw material was purchased from a party in Gujarat. First of all, they cannot take ITC. If the purchased goods are lost, destroyed, written off, etc., we cannot take ITC. And what about this insurance claim received? Insurance claim received is irrelevant here for the purpose of GST. So we will not take input tax credit with respect to the raw material purchased and destroyed. Then next one, this is inward supply. Next one, company purchased a 3-wheeler having a capacity of 2 persons including driver, engine capacity 20 cc. 20 cc is not called as a motor vehicle. Motor vehicle not exceeding 25 cc. So that is any vehicle not exceeding 25 cc is excluded from the meaning of motor vehicle. So therefore they can take ITC with respect to this at the cost of 2,50,000, which is being used for transportation of staff of a company from residence to factory and back. The vehicle was received on 5/2 and the payment was made on the same date, and whether it is intrastate or interstate. So they have not given any information. So here you can see it is considered as intrastate supply. So because they have said that it is purchased, so it is considered as intrastate. And motor vehicle definition, vehicle having less than 4 wheels fitted with engine capacity not exceeding 25 cc is not treated as motor vehicle. So they can take ITC 22,500 and 22,500. Suppose if you consider it as interstate supply, it will be coming under IGST column. And next, it has paid inward transportation, but logically speaking, 2-wheelers or any motor vehicles will purchase within the state only, because other state we will not be purchasing logically. So with that logic only, it is taken as intrastate. It has paid inward transportation expense of 30,000 to Mr. Z, a tempo owner who has not issued any consignment note. He has issued a consolidated bill of only on 3/2 and the payment was made on 4/2. That is exempted. Why it is exempted? transportation of goods by other than GTA or courier agency is exempted. So there won't be any GST on this. So that is also inward supply. It has supplied, outward supply, goods of value of 50 lakhs to V Limited. So Pandra, Gujarat includes 10 lakhs supplied to SEZ unit of V Limited. So 40 lakhs will be intra and 10 lakhs will be inter. Why? Supply to SEZ is always deemed interstate supply. So therefore here, so 40 lakhs will be taken as intra and 10 lakhs supplied to SEZ is taken as interstate. Then it has purchased goods from X Impex Limited, Kadi, Gujarat for use as raw materials in its factory. The value of the goods is 30 lakhs. So within the state, they can take ITC. So 30 lakhs into CGST, SGST, 2 lakh 70, 2 lakh 70, they can take ITC. Next transaction, it has availed supply of manpower security services from Y Limited, Vadodara, Gujarat, a registered taxable person. The amount paid is 1 lakh. The invoice was received on 1/2 and the payment was made on the same day. Actually, security agency services, if the supplier is other than body corporate and the recipient is registered, it will come under RCM, but the supplier is body corporate, so it will be FCM. So 1 lakh into CGST, SGST, 9,000 and 9,000 can be taken as ITC. So we have completed all this and assume the GST rates, and they have an opening balance of ITC of CGST 20,000, SGST 20,000. In respect of all inward suppliers, suppliers have uploaded the invoice in GSTR1 and it is made available in GSTR2B, which means they can take ITC. So we have an opening balance of ITC also. Now, so gross liability 3 lakh 69, 3 lakh 69 and 1 lakh 80, and we don't have any GST payable under RCM. And here, so ITC column, ITC, total ITC 3 lakh 1,500, 3 lakh 1,500 and 1 lakh 8,700. So plus opening balance we also have. Now net liability. So FCM liability, so 3 lakh 69, 3 lakh 69, 1 lakh 80 and ITC 1 lakh 8,700 we will use, and remaining we don't have, and 3 lakh 21,500, 3 lakh 21,500 we can utilize, and we don't have any RCM liability. So therefore the net GST payable is 47,500, 47,500 and 71,300. So these are just to stick on. We have seen multiple questions, around some 3 questions we have seen on the same concept of covering all the transactions. So this is how the 14 marks questions will be. One more model is also there, question number 30. So this also 14 marks question type only. Moto Power Private Limited, a registered person under GST, is engaged in manufacture of 5-seater luxury cars at its factories located in the states of Rajasthan, Uttar Pradesh and Gujarat. The company has obtained registration in each of these states. It also enters into contract for providing these cars on rent to corporate clients, wherein the cost of fuel is included in the value of supply. The company reports the following details for a tax period pertaining to its factory located in Gujarat. Okay, so therefore cost of fuel is included in the value of the supply, which means that the rate of GST will be 5%. Okay, the company reports the following details. So these are their payments. Payments means what? Inward supplies. Receipts means what? Outward supplies. And related to these payments and receipts, we have some additional information. All the above amounts are exclusive of all kind of taxes wherever applicable. However, the applicable taxes have also been paid by the company. Further, the following additional details are furnished by the company in respect of the payments and receipts reported by it. First, raw materials worth 0.5 lakhs. So there is raw material 4.5. Related to this raw material, they have given some information. Raw material worth 0.5 purchased from registered supplier located in Gujarat. So where is this company located? Moto Power Private Limited. So this is registered. So it company reports the following details pertaining to its factory located in Gujarat. So they are purchasing from a supplier in Gujarat, means it's an intrastate supply, and were destroyed due to fire in the factory and thus could not be used in the manufacturing process. Remaining materials are being procured from various vendors located in Maharashtra. So therefore 0.5 we cannot take as ITC and remaining can be taken. So 4,50,000 minus 50,000, that will be 4 lakhs, and it is from Maharashtra. Gujarat plant or Gujarat factory is purchasing from Maharashtra, means IGST. What is the rate of IGST given here? CGST and SGST rates on all inward and outward supplies are 9%, 9% and 18% respectively, except on renting of cars where the rate of GST is 5%. Okay, so here it is 18%, 4 lakhs into 18%, 72,000, that will be taken as the ITC. Then next one, next rent paid 1 lakh. Related to rent paid, they have given some information. Rent has been paid for the factory building located in Gujarat to its owner registered in Gujarat. So supplier is Gujarat, place of supply is location of property Gujarat, so it's an intrastate supply, CGST, SGST. So on 1 lakh, 9% and 9% CGST, SGST, and that can be taken as ITC. We don't have any restriction. Then next, raw material also we can take ITC, rent also we can take ITC. Then consumables 1.5 lakhs. Related to consumables, so we don't have any information here. So consumables 1.5 lakhs. Let's see, is there any information related to consumables? General insurance services, works contract services. So consumables, there is no information. So we don't have any direct information here. So we will just wait for the consumables. Maybe it is covered under any other point. Then security services. Security services we have. Security services 0.70 lakhs. So payment for security services, services provided by way of supply of security personnel for the tax period has been made by Safe and Secure Solutions Private Limited. So it's not covered under RCM. Security agent service will come under RCM if the supplier is other than body corporate, but the supplier is body corporate, so it will not be covered under RCM. So therefore FCM, and can we take ITC with respect to it? Yes, but where is this Safe and Secure Solutions located? Gujarat. And general provisions, so therefore intrastate supply 0.70, 70, and security services, see this, security services provided by Safe and Secure Solutions, a company located and registered, not registered under GST. When they are not registered under GST, then there is no GST itself, because they are unregistered person. First of all, it is not covered under RCM, it will be FCM, but the supplier is not registered, which means there is no GST in this case. So on this, no GST, and therefore no ITC. General insurance of cars manufactured 2.50. We can take ITC on that if there is any GST involved. So general insurance service have been availed from Dividend Insurance Company Limited, registered in Gujarat within the state, and generally insurance related to cars manufactured, we don't have any restriction, ITC will be available. So 2.5 lakhs CGST, SGST, so that can be taken as ITC. And next one, works contract service 1.6 lakhs. For works contract service, I have given 1 point, availed from Chitra Builders. Usually works contract service is a blocked credit, and they have availed from Chitra Builders Gujarat, have been used by the company for construction of a foundation on which machinery to be used in the production process is to be mounted permanently. So yes, ITC can be availed. So from where it is received, within Gujarat only, therefore it is intrastate 1.6 lakhs, so 1,60,000 into 9%, 14,400 and 14,400, ITC can be availed. Then next, audit fee 50,000. So for audit fee, they have given audit fee is paid to a firm of chartered accountants, Messrs. Pandya and Associates, registered in West Bengal, other state, with an aggregate turnover of 30 crores in the preceding financial year. For conducting the statutory audit of the company in the preceding financial year, the firm raises a invoice without invoice reference number for the said services. So then it is not called as a valid invoice, even though they can take ITC, but as it is not a valid invoice, they cannot take ITC with respect to this audit services. Audit services, they cannot take ITC. So when a supplier is required to give a e-invoice but has not given a valid e-invoice, even though recipient, it may get in 2B, but the recipient cannot take ITC with respect to this. So that is audit services, audit fee. Bank charges 10,000. For bank charges, is there any point? Yes, bank charges are towards various services availed by the company during the month with regard to its current account maintained with Money Bank registered in Gujarat. The bank issued a consolidated tax invoice for all such invoices at the end of the month containing the details of tax charge. Yes, they can take ITC even on the basis of consolidated invoice. Intrastate, so 10,000 into CGST, SGST 900 and 900. Then next, membership of automobile association. Membership of a club, health and association Automobile Association is registered in the state of Gujarat even though they pay GST, but they cannot take ITC with respect to this. Why they cannot take ITC with respect to this? Because it is membership of a club, health, and fitness center. That is only block credit, but association is not a block credit. Membership of a club, health and fitness center, but it's an automobile association. It's not a club. It's not a fitness center or health center. So they can take ITC. And where is that automobile association located? In Gujarat. So due to that reason, ITC available 900 and 900. Then next one. So these are all the inward supplies we have. Consumable point is still missing. The breakup of sales is as follows. So this is sales related information, and they have given one consumables point in 10th point you see. Further, consumables procured from registered supplier located in Gujarat include diesel worth rupees 0.75 lakhs used for running the cars, so rented out to Zame's Travels Limited. Assume except diesel, no other input or input service is used in providing the car renting service. So they have procured the consumables, and that consumables 0.75 lakhs worth of consumables is used for running the car, so rented out. Okay, and therefore on diesel definitely there is no GST paid, so take out. And remaining, assume that except diesel no other input service is used for providing car renting service. We need to understand here, when the renting is taxable at 5%, car renting is taxable at 5%, they cannot take ITC on inward supplies. Okay, so no ITC on inward supplies. 0.75 lakhs, first of all they are not paying GST. So what is the remaining consumables? Remaining consumables is 0.75. So 0.75 into CGST SGST. So consumables you see 75,000 into 6,000 CGST SGST 6,750, 6,750. So this is the total ITC that is available for them. Now we will analyze the outward supply data. So in this inward supply, we don't have any inward supply on which GST payable under RCM. So we will see the outward supplies. What are the various outward supplies? Sales we have 30 lakhs. For that sales in Gujarat 14 lakhs, sales in other states 6 lakhs, export under LUT 10 lakhs, no GST. So on 14 lakhs it is intra. So 14 lakhs into 9%, 1,26,000 and 1,26,000, and remaining 6 lakhs into IGST 1,08,000. Exports no GST. Then income from car rental income 0.5. Car rental income will be covered under FCM or RCM. So three conditions for RCM. So renting of motor vehicle, supplier should be other than body corporate, but the supplier is body corporate, so it will not come under RCM, it will be FCM only, but the rate of GST is 5%. So car rental income, we have some information. Car rental income pertains to renting of cars to Zame's Travels Limited, registered in Gujarat. Again it is intra, so therefore you take 0.50 into CGST SGST, so 2.5%. So then next one, next income from services provided to Gujarat Government Administration. So services provided to Gujarat Government Administration. So services provided to Gujarat Government Administration are under a health training program. 51% of the total expenditure is borne by Gujarat government. So this we don't have any exemption with respect to this, or do we have any exemption with respect to this? So we don't have any exemption. You can see here. So services provided to central government with respect to any training program for which 75% or more of the total expenditure borne by the government is exempted, but here we don't have that, so therefore it will be taxable. Won't it come under so government services provided to government in relation to function entrusted to them under constitution? Is it given that this is an activity entrusted to them under constitution? Not given. Due to that reason, that exemption also will not be taken. It will be taxable intrastate 2.5 lakhs into CGST SGST 22,500. As all outward supplies of this particular company is taxable, so therefore we don't have to reduce any proportionate ITC. Full ITC whatever we have taken, so that will be available, and the opening balance of ITC 0.50 CGST, SGST and IGST 0.35. So we have CGST, SGST opening balance also, that should be taken. Now the total ITC. Now the total liability also we have CGST, SGST, IGST. What is the IGST credit? 2,91,900. So 1,08,000 we are reducing 2,91,900. So minus 1,08,000. Still we have 1,83,700. So that we can use for payment of CGST, SGST, because we have CGST credit 8450 and SGST 1,07,000. So we can use that accordingly. So therefore IGST credit utilized for payment of CGST and SGST. So thereafter we have the net GST that is payable. Okay. So net GST payable from electronic cash ledger. So 2,91,900 is total, sorry, 1,07,000 is the IGST credit. So 1,08,000 minus 1,07,000, 1,000, and CGST credit and SGST credit is also within the liability. So 45,300 and 69,300. So this total is 2,91,900 is the total ITC. So therefore the net liability will be 45,300, 69,300 and 1,000. So then we have to write the notes, but this many notes you don't have to write separately. You can write along with the table itself, so that you will save the time in writing the notes separately. Then we are moving on to question number 31. So this question number 30 is also a 14 marks question only that we have seen so far. Question number 31, answer the following with reference to relevant provisions of CGST Act 2017. In some of the cases where the show cause notice has been issued by the proper officer to a noticee under section 74 subsection 1 of CGST Act for demand of tax not paid or short paid or erroneous refund or ITC wrongly availed or utilized, the appellate authority for appellate tribunal or the court concludes that the said notice is not sustainable under section 74. So usually whenever a 74 notice is invoked, which means that it is on account of fraud, collusion, willful misstatement or suppression of facts. But so what happened here is that on that appeal is made with the appellate authority, and the appellate authority or appellate tribunal or court held that so this is not sustainable under 74 for the reason that charges of fraud or suppression of facts have not been established against the noticee. In that case, the appellate tribunal or the court will refer the matter back for fresh adjudication and directs the proper officer to redetermine the amount of tax payable by the noticee, deeming the notice to have been issued under 73 of CGST Act in accordance with the provisions of 75. What would be the time period for redetermination? So usually in that case, as per 75, when the court remands the matter back for fresh adjudication, then if whatever amount that is covered, if the notice is given within the time limit under 73, that is 2 years 9 months from the due date of filing annual return or 2 years 9 months from the date of erroneous refund, then in that case, so the redetermination to be done by the officer within 2 years from the date the matter is remanded back for fresh adjudication, and they need to pass a order under section 75. So that information you need to write. Applicable time limit for redetermination of dues shall be 2 years from the date of communication of the said direction by the appellate authority or appellate tribunal or the court. How the amount payable by the noticee, deeming the notice so to have been issued under 73 shall be recomputed or redetermined. If the notice issued under 74 is within 2 years 9 months from the due date of furnishing annual return or from the due date, like from the date of erroneous refund, then the amount can be recovered, redetermined. The entire amount in the notice will be redetermined. If the notice is given beyond 2 years and 9 months, because 2 years 9 months is the time limit for issuance of notice under 73. So beyond 2 years and 9 months, then so the amount is not payable as per the notice. Whereas if that notice is for multiple financial years, then we need to consider whatever amounts which are recoverable in terms of 73, for that only they need to redetermine. When the notice was issued for multiple financial years, the amount payable in terms of section 73 shall be redetermined only in respect of that financial year for which the notice was issued before the expiry of the time limit. Then question number 32, discuss the amount of tax and penalty to be paid, if any, in the following independent cases where the show cause notice is issued under section 74 of CGST Act. So usually as per section 74, so there will be a penalty which will be 100% of the tax or ITC or refund, so or 10,000 whichever is higher. So this is on account of non-payment of tax, short payment of tax or wrong availment and utilization of ITC or erroneous refund on account of fraud, collusion, willful misstatement, suppression of acts or contravention with an intention to evade payment of GST. So here date on which credit was wrongly taken is 31st January 2019. Adjudication order passed on 26th July 2021 demanding the entire amount of credit with interest and imposing an amount equal to credit as penalty. So 100% of the credit wrongly taken will be the penalty, that is 200 lakhs. And what has happened here is that adjudication order is passed on 26th July, and in all these cases SC wants to pay the amount by 20th September. Now when the amount is paid within, so before the date of notice, so 15% of the original penalty will be payable as a penalty. After notice within 30 days, then it will be 25%, and thereafter within 30 days from the order it will be 50%, and beyond 30 days from the order it will be 100%. Here what is the date of order? 26th July. When are they making the payment? 20th September. So is it within 30 days from 26th July? No. So it is beyond 30 days from, so 26th July, August only na, but here they are making payment in September. So beyond 30 days, so which means that original penalty is payable, that is 200 lakhs is only payable as the penalty. Then second, 30th June, date on which credit is wrongly taken, 250 lakhs, adjudication order passed on 26th August demanding the entire amount of credit with interest and imposing an amount equal to credit as penalty, but they are making payment on 20th September. So from 26th August order date is the date on which they pay penalty within 30 days. Yes, 26th August to 20th September within 30 days. So if it is within 30 days, then in that case 50% of the original penalty. So 250 lakhs into 50%, 125 lakhs will be payable as the penalty. Then next one, 30th October 2019, date on which credit was wrongly taken, 120 lakhs. Show cause notice has been issued on 5th September demanding the entire amount of credit with interest and proposing a penalty equals to 100% of the credit taken. So notice was issued on 5th September. They are making payment within 30 days from the date of notice. So 25% of the original penalty. So 120 lakhs into 25%. So that will be 30 lakhs will be payable as the penalty. Then next one, statement of the, so 30th January 50 lakhs, statement of the managing director has been recorded on 6th September wherein he has admitted the non-receipt of the inputs and availing the credit accordingly. So therefore before notice itself they are making the payment 20th like September, notice is not yet issued. Based on the statement itself the payment is being done. So therefore in that case 15, if at all penalty is levied, so 15% of the original penalty, that is 50 lakhs into 15%, 7.5 lakhs will be payable as a penalty. So that will be taken. Suppose by the time if they gave a notice, and if we make payment after notice, then 25% of the 50 lakhs, that is 12.5 lakhs will be payable. So this is a very good question based on computation of penalty. So this question is given. Then question number 33. Pursuant to audit conducted by the tax authorities under section 65, a show cause notice was issued to Home Furnisher Surat, a registered supplier. So audit under section 65 is department audit. In department audit they identified certain lapses. Based on that they gave a notice to a person alleging that it had wrongly availed the input tax credit without actual receipt of the goods for the month of July. So without receiving goods they have taken ITC. In the absence of a satisfactory reply from Home Furnishers, Joint Commissioner passed an adjudication order dated 20th August confirming a tax demand of 50 lakhs and imposing a penalty of equal amount under section 122. Home Furnisher does not agree with the order passed by the Joint Commissioner. It decides to file an appeal with the appellate authority against the said adjudication order. It has approached you for seeking advice on the following issues. Can Home Furnishers file an appeal to appellate authority against the adjudication order passed by the Joint Commissioner? If yes, till what date the appeal can be filed? So they can make an appeal within 3 months from the date of communication of that order, and it can be extended for a further period of 1 month. So 3 months from the date of communication of order, and it can be extended for a further period of 1 month if the appellate authority condones the delay. Then second, does home furnishers need to approach both central and state appellate authorities for exercising its right of appeal? No, we have cross empowerment, which means that so CGST and SGST officers, to ensure that proper officer under CGST is also treated as a proper officer under SGST. Accordingly, if any order is passed by officer under SGST, so then the said order, rectification against the said order will lie only with the proper officer under SGST Act. So home furnishers required to file appeal only with the central tax appellate authority, not the state tax, because the order is passed by the central tax. Then third part, home furnishers is of the view that there is no requirement of paying pre-deposit of any kind before filing an appeal with the appellate authority. Give your opinion on the issue. No, they need to make a pre-deposit. How much? 10% of the disputed tax. What is the disputed tax? 50 lakhs na? 50 lakhs into 10%. So 50 lakhs into 10%, subject to maximum 50 crores, but we don't have maximum. So therefore 5 lakhs will be taken as the pre-deposit, 2 lakh 50 under CGST, 2 lakh 50 under SGST. Then next one, question number 34. Adinath Private Limited, registered under GST in the state of Uttar Pradesh, instructed Ashok Transporters to deliver certain taxable goods to Mahavir Enterprises in Maharashtra on 10th January. The value of the goods is 6,80,000, which was chargeable to GST at 18% IGST. While the goods were in transit, proper officer intercepted the goods and the truck of the goods where the goods are being transported under section 68. As per section 68, proper officer is having power to intercept the vehicle. However, the driver of the truck failed to tender any document in relation to the goods in movement. The proper officer, after conducting physical verification of the goods and the truck, decided to seize the goods and truck and issued a notice under 129 for paying the penalty. So penalty will be payable under 129 after giving it an opportunity of being heard. You are required to determine the amount of penalty payable if Adinath Private Limited does not come forward. Then who is coming forward? The transporter is coming forward for payment of penalty. Further discuss the suitable course of action for Ashok Transporters if it intends to get its truck released. As per section 129, where the owner of the goods is not coming forward to claim the release, then the penalty payable will be 50% of the value of goods or 200% of the tax payable, whichever is higher. So we need to take 50% of the value of goods. So first we have 6,80,000 and GST 18%. So first we will compute it under CGST. They have not asked which section, which act. They have not asked which act. So they have just given the section. So therefore we will compute first under CGST Act. What is the CGST Act? 50% of value. What is 50% of value? That is 6,80,000. 6,80,000 into 50%, that will be 3,40,000 or 200% of tax. So what is 200% of tax? 6,80,000 into 9% into 200%, that is 1,22,400 should be taken. Okay, so that should be taken here. So what we need to do is that 200% of tax. How much we are taking as tax? The tax is taken. So this is 18% IGST. 18% IGST means we are right now computing under CGST. So 6,80,000 into 9%, 61,200 into 200%, that is 1,22,400. Okay, whichever is higher, whichever is higher. So divided by 2, 61,200. So that is 1,22,400. Whichever is higher, 3,40,000 will be taken under CGST Act. The same penalty is payable under SGST Act also. Okay, 3,40,000 is payable. Suppose sir, if we directly needs to compute under IGST, that also we can do multiply by 2, means 100% you should take as value of the goods. So this is under CGST Act. You just do it this way, this will be sufficient. And what if they have not given this as IGST? Okay, so if it is given as chargeable to GST at 18%, so this IGST is not given, for example, then in that case, this 18% is taken as CGST. This 18% is taken as CGST and accordingly it will be computed. As it is given as IGST, this is how we need to do. And next one, Even penalty payable for release of conveyance. What is a penalty payable for release of conveyance? Penalty payable for release of goods, that is 3,40,000 or 1,00,000, whichever is lower. So therefore, they need to pay a penalty of 1,00,000 for release of the truck. So this is related to penalty under section 129. Next, question number 35. Examine whether the offences committed in each of the following independent cases are bailable. Further determine the quantum of punishment on prosecution under CGS Act in each of these cases. So right now, the offences which are covered under imprisonment is ICEBID, and out of this, what are the offences that leads to cognizable and non-bailable? So IIC. So invoice default, ITC default, and collected amount as tax not paid within 3 months. If it exceeds 2 crores, arrest is there. If it exceeds 5 crores, then it is cognizable and non-bailable offences. So Homi Gaba collects 240 lakhs as tax, collected an amount as tax. So that's an offence for imprisonment from its clients, and deposit 150 lakh with the central government. So 240 minus 150, 90 lakhs. So for this default, collected amount as tax not paid within 3 months, imprisonment gets attracted only if it exceeds 2 crores. So here, as it does not exceed 2 crores, so there won't be any imprisonment in this case on account of this offence. Balance amount of tax is not paid to central government. It is found that he has falsified financial records and has not maintained proper records. Books of accounts default. For books of accounts default, no need to see monetary limit. Always the imprisonment will be up to 6 months or fine or both. So see here. So imprisonment is given under section 132, and collected amount as tax not paid within 3 months. If it exceeds 200 lakhs, okay, if it exceeds 2 crores, so then only there will be, here it is only 90 lakhs, which does not exceed 200 lakhs, therefore there is no imprisonment on account of that offence. However, books of accounts default, there is an offence which is extending for imprisonment up to 6 months or fine or both. And next, number 2, Datukeshwar Dutt collects, and it is not leading to any cognizable and non-bailable offences. This is not called as, and arrest is also not applicable in this case. Datukeshwar Dutt collects 630 lakhs as tax, collected amount as tax, but deposited only 120 lakhs. So 630 minus 120 is 510 lakhs, more than 5 crores. So with the central government, balance amount is not paid to central government. So amount collected as tax but not paid within 3 months, so beyond 5 crores, attracts imprisonment up to 5 years plus fine. And as it is exceeding 5 crores, it leads to arrest, and it will be cognizable and non-bailable offence. So first, imprisonment. Imprisonment minimum 6 months and up to 5 years plus fine. And even this is a non-bailable offence in terms of section 132(5), and it leads to arrest also, cognizable and non-bailable offence. What would be the implications in the above case if Homi Gaba and Datukeshwar Dutt repeat the offences? So whether it is books of accounts default or any offence, if it is a repeated offence, the imprisonment is minimum 6 months and up to 5 years plus fine. So that is what, minimum 6 months and up to 5 years plus fine in case of repeated offences. And it can be assumed that these offences are proved in the court. Of course, only when the offence is proved in the court only imprisonment will be applicable. Then question number 36. Department initiated prosecution proceedings against a taxable person who has evaded GST of rupees 4.2 crores. He has approached the commissioner with a request for compounding the offence. And after considering the request, the commissioner has directed him to pay an amount of 2.5 crores as compounding amount. Indicate the minimum and maximum limits for compounding. Now there is a revised limit of minimum and maximum, that is 25% minimum and 100% is the maximum. So 25% of 4.2 crores 1.05, 100% of 4.2 crores. But of course, in case of specific offences, that limits will change. So 40 to 60%, 50 to 75%, like that, we have a difference in that. Is the amount fixed by the commissioner in the case within the limits prescribed under the law? Yes, 2.5 crores is within the limit of 1.5 and 4.2, it is within the limits. What is the consequence of the decision of commissioner allowing the request for compounding the offence? So upon payment of compounding amount, there won't be any further proceeding. All the proceedings shall stand abated. Even if prosecution is initiated against a person, the prosecution proceeding stands abated. Okay. And once the prosecution order is passed, that is imprisonment order is passed, compounding is not possible. And also one more point you need to write now, that compounding is done only once during the lifetime of a person. So subsequent compounding is not at all possible. Then question number 37, briefly answer the following questions with reference to the provisions of rectification of mistakes or errors apparent on the face of the record by any authority under section 161. First, which documents are covered under 161? So any document, notice or order or certificate or any document issued by the department. So decision, order, notice, certificate or any other document. Then who can rectify the errors apparent on the face of the record? So that authority which has given the notice or document, so has power to rectify the mistake apparent on the face of the record. Any authority who has passed or issued that notice or order. What types of mistakes or errors can be rectified? So any mistake which is apparent on the face of the record, so that is to be rectified, which are apparent on the face of the record, and decision on the debatable point of law is not a mistake apparent on the face of the record. Then next, what is the time limit within which the rectification to be made? Within 6 months. Within 6 months from the date of issue of such decision or notice. However, if it is arithmetical error or any computational error, so that don't have any time limit. The time limit does not apply where the rectification is purely in the nature of clerical or arithmetical error, so which is on account of accidental slip or omission. Then question number 38. Mr. A is a salaried class person, unregistered under GST. He has entered into an agreement or contract with a builder for supply of service of construction of flats or building, etc., and had paid the amount towards consideration for such service. So he is a salaried class person, unregistered under GST. He entered into agreement with a builder for supply of service of construction of flats or building, etc., and has paid an amount towards consideration for such service, either fully or partly along with applicable tax. The said contract or agreement has been cancelled. So subsequently, due to non-completion or delay in construction activity, since the time limit for issuance of credit note is already over, so as the contract got cancelled, so the supply got cancelled, but on advance already they would have paid GST, they cannot give a credit note. The supplier has issued a commercial credit note, not the GST credit note, and refunded the amount collected excluding GST. For example, 1 lakh I am collecting, I am refunding 1 lakh plus GST I am collecting, but I am refunding only 1 lakh. The GST I am not refunding. The supplier had not refunded the GST component, stating that he had paid that GST to the government and he is not in a position to claim its adjustment, as the time limit for issuance of GST credit note has already been lapsed. So he had rather asked buyer to apply for GST refund from government. Mr. A approached you seeking your advice on the following: whether he can apply for GST refund. Yes. So even a recipient who borne the incidence of the tax can make an application for refund, even though such recipient is an unregistered person. So any person can claim refund of tax if paid on such amount by making an application within 2 years from the relevant date. In case where the applicant has borne the incidence of tax and not passed on the same to any other person, the said refund shall be paid to him instead of being credited to Consumer Welfare Fund. What supporting documents he will be required to furnish to claim the GST refund? A cancellation letter. So there are 2 documents usually. So they need to prove that unjust enrichment, and second, statement containing the details of the invoices. Okay. So Mr. A approached you whether he can apply for refund. That is, A can apply for refund. A can apply for refund, but A has to prove. So A is the supplier. A is the unregistered under GST, has entered into contract. No, A is the recipient. As A is the recipient, A can claim the refund. And refund is not subject to unjust enrichment, means A don't have to. As A is the person who borne the incidents, he is an unregistered recipient, he don't have to prove unjust enrichment. We have relaxation, but he need to submit the documentary evidence that he has paid the tax. That is, first he has made the payment, the receipt voucher, and thereafter the cancellation letter that needs to be given. So these are the documents that he need to submit: a copy of such invoice, proof of making payment, copy of agreement, registered agreement or contract, the letter issued by the supplier for cancellation, details of payment received from the supplier. and a certificate issued by the supplier to the effect that the tax has been paid in respect of the invoices on which refund is claimed by the applicant, that he has not adjusted the tax amount involved in these invoices. Where the refund claim is about 2 lakhs, then CA certification will not be required to be furnished, because doctrine of unjust enrichment is not applicable in this case. So, these points we need to write for this question 38. So, this is also a very good question. I expected this question for November 23, they have not asked this. So, for May 24, this question is possible. Then question number 39, Y Limited exported service valued at $1 lakh. Supply of service was completed on 15th November 2020. Payment for this service was received on 30th December 2020. Refund claim was filed by Y Limited in respect of the tax paid on inputs and input services on 31st January. The refund claim was sanctioned on 30th April. What is the amount of refund Y Limited will get in accordance with law? What is the relevant date and what is the rate of interest as per GST law? When are they making application? So, they exported a service valued at $1 lakh. They made a refund application, so on 31st January. So, they need to get the refund within 60 days from the date of application. So, 31st January 2021, so means 31st January 2021, and the refund was sanctioned on 30th April 2021. So, you see the number of days. So, in February 28 days, March 31 days and April 30 days. So, 89 days, 89 minus 60, 29 days. For this 29 days, interest needs to be computed. Okay. So, simple, 31st January to 30th April. So, number of days minus 60 days is the interest free period. For 29 days, interest needs to be computed on what? On 6 lakh rupees. So, 6 lakhs into 6% into 29 divided by 365, that is 2860.27. So, 2860. And what is the relevant date? So, relevant date is the date on which invoice is raised or the payment is received, whichever is later. Date on which invoice is raised. So, or the payment is received, whichever is later. What is the date on which supply is completed? Supply is completed on 15 November and payment was received on 30th December 2021. Refund claim was filed by Y Limited. So, payment whichever is later. So, later is December only. So, from December within 2 years we need to make. So, 30th December 2020 is the relevant date for making application. So, in case of export of services, remember the relevant date, the date on which invoice is raised or the date on which payment is received, whichever is later. Then question number 40, this also on refunds. ABC Limited is planning to run a duty free shop, because right now we have an amendment related to duty free shop, that is supply of warehoused goods under customs. So, even though it is excluded from supply, but for ITC purpose it will be treated as exempted supply. So, ABC Limited is planning to run a duty free shop at the departure hall of an international airport. From such shop, it will be making supply of imported as well as domestically procured goods. It wants to know about the following issues: whether supply of goods to outgoing passengers will qualify as export under customs law and under GST law. So, under customs law, it will qualify as export. So, supply of goods to outgoing passengers qualify as export under customs law as well as under GST law. So, in case of sale of goods by duty free shop at the departure hall, so to outward passengers, so to outboard, like it will constitute exports by duty free shop. Consequently, in terms of section 16, it becomes a zero rated supply. Okay. Then whether it shall be entitled to claim ITC of GST paid on domestically procured goods. When our outward supply is zero rated, we can take ITC on inward supply na? Yes, ITC is admissible. Whether it shall be entitled to claim ITC of GST paid on input service like renting of premises, advertisement services, etc. Yes, ITC admissible of GST paid on input service like renting of premises, advertisement services, etc. Whether it shall be entitled to claim refund of ITC availed on inputs as well as input services, guide the company on the above stated issues. So a claim of ITC, refund of ITC on inputs as well as input services is admissible. So they can take ITC as the outward supply is zero rated, refund of ITC availed on inputs as well as input services. Okay. Then what is that warehoused goods? We have supply of warehoused goods under customs. So that is excluded from supply. As it is excluded from supply, that will not become supply under GST. Consequently, we cannot take ITC. And even though it is excluded from supply, while computing the common ITC reversal, we need to add it under exempted supplies. So these are the various questions, 40 questions that we have on GST, and I have taken some 10 questions on customs. So look into question number 41. So this is from customs and FTP. So question number 41, KTU Limited has imported certain goods for sale in India from country Z, which are liable for anti-dumping duty. So they imported certain goods for sale in India from country Z, which are liable for anti-dumping duty. Country Z sell the like goods in its domestic market in the ordinary course of trade at $300 per piece. So what is the anti-dumping duty? Dumping margin or injury margin, whichever is lower. So what is the normal selling price in their country? $300. The imported goods are sold in the domestic industry at $275 per piece. KTU has imported the goods at $180 and the landed value is $190. So 300 minus 180, so 120 is the dumping margin. And injury margin, what is the normal selling price in India? 275 minus 190, 275 minus 190, so 85 will be the injury margin. Compute the anti-dumping duty payable by KTU for 800 pieces. So whichever is lower, which is lower? 85. So 800 into 85. What is the exchange rate? 72. So therefore 48,96,000 will be taken as the anti-dumping duty. First you need to write what is the anti-dumping duty. Dumping margin or injury margin, whichever is lower. What is dumping margin? Normal selling price in the exporter's country minus price at which the goods are exported, and injury margin means what? After that you need to do the computation here. So that is 48,96,000. Then question number 42, Niryat exporters imported some goods on 1st January. The goods were not meant for being used in a 100% EOU, STP or EHTP. The goods were cleared from the Mumbai port for warehousing on 8 January by presenting a into-bond bill of entry. So actually they were depositing the goods in the warehouse. The assessable value of goods was $10,000 on 8 January. The exchange rate was 66 rupees per dollar and the rate of basic customs duty was 15%. The order permitting the deposit of goods in the warehouse for 4 months was issued under section 60 on 15 January. 15 January is the warehousing order. The goods were thereafter deposited in a warehouse at Pune and were cleared from the Pune warehouse on 31st May. They have actually cleared. The rate of basic customs duty was 15% and exchange rate was 68.75, and IGST 10% is applicable on the said goods. Further, rate of basic customs duty was 12% and exchange rate was 67 on 15th May at the time when they have cleared. Ignore IGST and agriculture infrastructure developments. You are required to compute total customs duty payable, interest if any. First, what is the date on which they have got the warehousing order? 15 January. What is the warehousing period? 4 months. 15 January means 15th February, March, April, May. By 15th May, warehousing period is over. So Kesoram Rayan case is applicable. As per Kesoram Rayan case, Supreme Court held that if the warehousing period is expired but the goods are still in the warehousing period, on expiry of warehousing period the goods are deemed to have been removed, and on that day whatever is the rate of duty, that is relevant. So on 15th May, what is the rate of duty? 12%, that is only relevant. So we need to take 12% as a basic customs duty, but the exchange rate is always at the time of inbound bill of entry. At the time of inbound bill of entry, what was the exchange rate? 66 as per section 15. So first we need to take the assessable value. What is the assessable value? $10,000 into 66. We need to take exchange rate 66. So 6,60,000. And what is the basic customs duty as per Kesoram Rayan case? 12%. So basic customs duty 12%, social welfare surcharge 10% of 12%. IGST may be ignored, so we don't have. So therefore the total customs duty payable is 87,120. But when are we paying this customs duty? At the time of actual clearance, that is on 31st May. Now, we need to calculate the interest. Now, see the warehousing order till the date you are actually making the payment. What is the warehousing order? 15 January, na? Don't count 15 January, count it from the next day. So, 31 minus 15, so 16 days in January, 28 days in February, 31 days in March, 30 days in April, and 31 days in May. So, total 136 days. In that, what is the interest free period for which we do not have to pay interest in case of warehoused goods? 90 days. So, minus 90. For 46 days, we need to pay the interest. Okay. So, for 46 days, we need to pay the interest, and on what? On the customs duty payable 87,120 into 15% is the rate of interest, not 18%. In GST only 18%, here it is 15% into, so 46 divided by 365, that is 1,647 will be taken as the interest payable. Okay. Actually, ICI in the RTP they have taken 45 days, but which is not correct. 46 days only should be taken in this case. Then next one, question number 43. Kankan Corp has imported a machine from USA for rupees 365 lakhs on payment of appropriate customs duty in February. However, in July, the machine had to be sent back to the supplier for repair, not amounting to manufacture, from the factory of Kankan Corp. The machine was repaired and thereafter re-imported. We have notification 45/2017 which says that if the goods are imported and exported for repairs, on re-import we need to pay customs duty on the fair value of the repairs plus freight and insurance both ways. The supplier has agreed to provide discount of 60% of the fair value of repairs, resulting in $12,000. But 12,000 is not the fair value of repairs. 12,000 is after 60% discount. So, means if 40% is $12,000, then 100% is how much? So, 12,000 into 100 divided by 40, so divided by 0.4, so that will be 30,000. So, fair value will be $30,000. Fair value will be $30,000. So, we need to take $30,000 as the fair value of repairs plus freight and insurance both ways should be taken. And what should be taken as the relevant date for determination of exchange rate? Date of presentation of bill of entry. So, bill of entry, that to CBIC rate, that is 62 rupees to be taken. So, 30,000 into 62, the assessable value is 18,60,000. Then, so 18,60,000 plus freight and insurance both ways. So, everything should be taken, both inward freight and outward freight and insurance. So, 18,60,000 plus 23,000 plus 93,500 plus 27,000 plus 1,06,500, that will come to 21,10,000 is the assessable value. On that, we need to pay customs duty. What is the relevant date for determination of customs duty? Date of presentation of bill of entry or arrival of aircraft, whichever is later. 21st February, 26th February, whichever is later, 15%. So, on 21,10,000, 15% is the basic customs duty, social welfare surcharge 10%, and the IGST rate given here, determine the total duty payable, IGST 12% given. So, therefore, IGST 12%. What we need to do? First, assessable value 21,10,000 into 15%, 3,16,500. On that 10% basic social welfare surcharge 31,650. Now, while computing IGST, we need to take assessable value 21,10,000, basic customs duty 3,16,500 plus social welfare surcharge 31,650, 24,58,150. On that 12% should be taken as IGST 2,94,978. This is the total customs duty payable. So, this is related to the exemptions, notification 45/2017. Then question number 44, Supreme Car Decors imported car music system and GPS devices from Germany. The importer submits the following issues for your consideration. 7 music systems were pilfered before unloading and before the proper officer has made the order for clearance for home consumption. As per section 13, the pilferage should have happened after, before or at the time of unloading, that is unloading, at the time after unloading and before order for clearance. Okay. So, either home consumption or warehousing, but the pilferage has happened before unloading Means as per Mangalore Refinery's case, first of all, there is no levy. So there is a Supreme Court judgment which is Mangalore Refinery's case, which says that, so first of all, there is no levy. So pilferage before unloading is basically pilferage while the goods are in the custody of transporter. Section 13 benefit is available only in respect of pilferage post unloading. In the given case, provisions of section 13 shall not be applicable. However, importer shall still not be liable to pay import duty. So because we have Mangalore Refinery's case, one more case, Garden Silk Mills case also, which says that only when the goods are crossing the customs barrier, on that quantity only we need to pay customs duty. So therefore, customs duty cannot be levied on these 7 music systems, but not section 13, not pilferage section, but there is no levy. And even Mangalore Refinery's case also we need to refer Mangalore Refinery's case by Supreme Court. And already I have uploaded, so one customs case law summary, you can have a look into that particular customs case law summary. So that will give you an idea about what are all the various customs case laws that are applicable for your exams. Then 10 GPS devices were pilfered after unloading and before the proper officer has made an order for clearance for home consumption. So 10 GPS devices were pilfered after unloading and before proper officer has made order for clearance, will get section 13 benefit. Section 13 benefit is available and the importer is not required to pay duty. 30 music systems were damaged after unloading. Damage means abatement and examination for assessment by the customs authorities. Then section 22 abatement is applicable based on the value of the damaged 30 systems. So we need to take. So section 22 abatement of customs duty will be applicable in that case. Then question number 45, product Z was imported by Mr. X by air. The details of import transaction are as follows. Price of Z at exporter's factory, we got X factory price. When we got X factory price, so X factory price plus freight from factory of the exporter to the load airport and loading charges in the load airport, these two if we add, we will be getting FOB price. And for that FOB price, so freight from load airport to airport in India 4,500, but in case of air freight, we need to take actual or 20% of FOB, whichever is lower. So therefore, that adjustment of 20% we need to make, and insurance charges actually is given, so we will take actuals. Though the aircraft arrived on 22/8/2021, the bill of entry for home consumption was presented by Mr. X on 28/2021. So the other details furnished by Mr. X are as follows. Compute the value and customs duty payable. Now in this case, what is the relevant date for determination of rate of duty? Date of presentation of bill of entry or arrival of aircraft, whichever is later. So arrival of aircraft 22/8, bill of entry 28, which is later 22/8. On that date, what is the rate? 10% basic customs duty and 12% IGST should be taken. But for the purpose of exchange rate, always bill of entry. So exchange rate notified by CBIC, 60 rupees per dollar will be taken as the exchange rate. Now we need to compute the value. First, we will take the X factory price. So what is the X factory price here? So the X factory price, if you see, X factory price, we need to check both in terms of dollars as well as in rupees. So $8,500 into 60. So $8,500 into rupees 60 per dollar. This will be X factory price. So 8,500 into 60, that will be 5,10,000 is X factory price. To this, we need to add freight from factory to load airport. Factory to load airport. Factory to load airport. What is the freight from factory to load airport? You can see here $250. So $250 into same rupees 60 per dollar. So 250 into 60, that will come to 15,000 rupees. Again, loading charges. Loading charges, same, loading charges is also $250. So 250 into rupees 60 per dollar, that will be rupees 15,000 will be loading charges. Okay, then next. So this we don't have anything else. So if you add this, this will be called as FOB price. FOB price. So 5,10,000 plus 15,000 plus 15,000, that will be 5,40,000 is the FOB. Now for this we need to add air freight. How much is the air freight? Actuals. Whenever you take 20%, that 20% is from the factory gate of the exporter to the importer's port or airport. So in actuals, what you need to do, you need to take, so this 15,000 plus 15,000 plus freight from exporter's airport to importer's airport 4,500. So 4,500 convert into 60, so that will be 2,70,000. So 2,70,000. So what is actuals? 2,70,000 plus 30, 3 lakhs, or 20% of FOB, because when you take 20% of FOB, that 20% of FOB is from factory gate of the exporter. So 5,40,000 into 20%, 5,40,000 into 20%, that is 1,08,000, whichever is lower, minus already considered in FOB. How much is already considered in FOB? 30,000. So that should be reduced, 30,000 should be reduced. So now what we will take, 1,08,000 or 3 lakhs, whichever is lower, 1,08,000 minus 30,000. So 78,000 should be taken as air freight and add insurance. So insurance will be taken as actuals. So how much is the insurance here? 2,000. So 2,000 into 60, that will be 1,20,000. Now this will be called as CIF price or assessable value, that is 5,40,000 plus 78,000 plus 1,20,000, 7,38,000 will be taken as assessable value. So 7,38,000 should be taken. So be careful with respect to this computation, wherever 20% comes. So we need to do this way only. This is the correct approach as per ICI. Now thereafter customs duty computation is easy. Basic customs duty 10% of 7,38,000, 73,800. Social fair surcharge 7,380, then IGST at the rate of 12% on assessable value, basic customs duty, social fair surcharge. So we get the total customs duty payable. The next question, question number 46. Mr. X imported certain goods from a related person, Mr. Paul of US, and transaction value has been rejected. Rule 4 and 5 of import valuation rules are found applicable, that is identical goods and similar goods are found inapplicable, as no similar or identical goods are imported into India. Mr. X furnishes cost related data of imports and requests customs authorities to determine the value as per rule 8. Rule 8 is what? Customs computed value. The relevant data are as under. So cost of materials. So in customs computed method, what we will do, we will take the cost of materials and add all conversion cost and usual profit margin plus transportation cost till India, and we will get the assessable value in India. So cost of materials incurred by Paul 2,000, we will take that, and fabrication charges also we will take. Other chargeable expenses, yes, other indirect cost is 250, freight from Paul's factory to US port 250, loading charges at US port is 100. Now they are telling profit margin is 20% of FOB. So FOB is the sale price. So if profit is 20% of sale price, then how much it is on cost? 20. Let 100 be the sale price. 20 rupees is profit. Then cost is 80. So 20 by 80, that is 25% on cost. 25% on cost will be taken. Now what is the cost? Now if you add this, this is the cost. This is the cost. We don't have anything thereafter, freight and insurance only. This is the cost. So what is the cost here? The cost here is 2,000 plus 1,000 plus 400 plus 250 plus 250 plus 100. The cost is $4,000. Now profit is 25% on cost. So plus profit. So 4,000 into 25%, $1,000. So this will be called as FOB. So the FOB will be $5,000. We got FOB. Now freight and insurance. What is the freight here? Air freight. Air freight means again we need to compare A, actuals. How much you will take as actuals? Not 1,500. 1500 plus freight from factory to port and loading charges. So 250 and 100 and 1500 is taken as actuals. So 1500 plus 250 plus 100, that will be 1850 is actuals, or 25% of FOB. What is FOB? 5000. So 1850 or 20% of FOB 5000, that is 1000. Whichever is lower, 1000 will be taken. But from that 1000, already 250 and 100 is in FOB, na, you take out. So 1000 minus 250 minus 100, 650. So 650 will be taken as freight. I have given the computation here. And insurance, actual ascertainable, we will take actuals 50. So we got the assessable value, that is price prevailing at the time of importation. For that, if you convert the exchange rate 65, we will be getting 3,70,500. Now see one paragraph below this. The customs authorities are of the opinion that since the value as per rule 7 can be determined at 4 lakhs, there is no need to apply rule 8. Can the request of Mr. X be legally acceptable? See, actually between deductive value and computed value, they can decide anything. Here, how much is the computed value? 3,70,500, but the deductive value is 4 lakhs. So whichever is feasible, whichever is beneficial to the importer, they can go for it. So therefore, they can go for this 3,70,500 itself. Then question number 47, Lakshmi company imported goods valued at 10 lakhs, vide a bill of entry presented before the proper officer on 15 December 2020, on which date the rate of customs duty was 20%. The proper officer decided that the goods should be subject to chemical or other test, and therefore the duty was provisionally assessed. Yes, when the imported goods requires any chemical examination or test, those goods will be provisionally assessed by the proper officer, and they provisionally assessed at 10 lakhs, and Lakshmi company paid a provisional duty of 2 lakhs on the same date, and they want to voluntarily pay duty of 1,50,000 on 20th January 2021. Can Lakshmi company provisionally pay the duty, and what are the conditions which are to be complied before such payment is made? So they can pay the duty on provisionally basis, and they have to furnish a security for payment of the differential amount, that is between the final assessment and the provisional assessment. Determine the amount of interest payable, if any, under section 18 of Customs Act, assuming the payment of 1,50,000 as stated above is made on 20th January, and the duty finally assessed on 31st January is 4 lakhs, and the balance duty is paid on the same date. So what is the final assessment? 4 lakhs. What is the provisional assessment? 2 lakhs. When the provisional duty should be paid? Provisional duty should be paid within 1 working day, and they are making payment on the same date, so there is no interest on provisional duty. So provisional duty should be paid within 1 working day. They are paying it on the same date, so no interest. The differential amount, what is the differential amount? 4 lakhs final, 2 lakhs provisional, differential 2 lakhs. In the 2 lakhs, so we need to compute interest from the date, from the first day of the month in which provisional assessment is resorted. When the provisional assessment is resorted? January, which means not January, 15 December means 1st December. So we need to compute interest from 1st December till the date of payment. So 1,50,000 is paid on which date? 1,50,000 is paid on 20th January, na? So 20th January we need to compute interest on 1 lakh, and on remaining amount of, that is 1,50,000, and remaining amount of 50,000 from 1st December to the date of payment. When is the date of payment? 31st January to 31st January. So now December you count, 1st December also. So December 31 days and January 20 days. So for 51 days we need to compute interest. Interest under customs is always 15% on 1,50,000, whereas on remaining 50,000 we need to compute interest at 15% till 30th January. So December 31 and January 31, so that will be 62 days. So we need to compute the interest. So 4,418 will be taken as interest payable. Then question number 48, Mr. X, a chemical manufacturer, imports a machine from Germany on 12 January 2019 for rupees 20 lakhs. Mr. X is eligible for concessional rate of customs duty on capital goods imported by him, subject to the condition that he follows customs import of goods at concessional rate of duty rules. Machinery was put to use on 1st February 2019. On 5th April, Mr. X wants to clear the machine for home consumption after having used the machine for the specified purpose for which it was imported. So, when it was put to use 1st February 2019 and on 5th April they want to clear the machinery and they are importing the goods at concessional rate of duty. And in case when the imported goods are under concessional rate of duty and when those goods are sold, we need to pay customs duty on the depreciated value of that capital goods. And how the depreciation will be computed? Depreciation is based on the date it is put to use till the date it is disposed of. For every quarter or part thereof in the first year it is 4%, for every quarter or part thereof in the second year and third year it will be 3%, for every quarter or part thereof in the fourth year and fifth year it will be 2.5 and thereafter it will be 2. Now, when it is put to use 1st February 2019 till to 5th April 2022. So, therefore, first year is 2019. In 2019, how many quarters are part? There are 4 quarters. 2020 also 4 quarters. 21 also 4 quarters. 22 Jan, Feb, March and April. So, 2 quarters. So, for every quarter or part thereof in the first year 4%. For every quarter or part thereof in the second year and third year 3%. For every quarter or part thereof in the fourth year and fifth year is 2.5. So, total depreciation will be 45%. What is the imported value of the goods? 20 lakhs is the imported value of the goods. So, 20 lakhs minus 45% will be 11 lakhs will be taken as the depreciated value of the goods. On that 11 lakhs, how much custom duty payable? See this. Concessional rate of custom duty is 5% and the normal rate of custom duty 20%. So, 11 lakhs into 20%, 2 lakh 20. But at the time of import already they would have paid 5% on 20 lakhs. So, 2 lakh 20,000 minus already paid at the time of import. So, 20 lakhs into 5%, 1 lakh. So, 2 lakh 20 minus 1 lakh, 1 lakh 20 will be payable at the time when the capital goods are cleared for home consumption, that is cleared. If the capital goods imported are used for the purpose and thereafter it is cleared, we need to pay 1,20,000 plus applicable interest also we need to pay. 15% interest also we need to pay, but they have asked us to ignore the interest calculation. Interest from the date of import till the date we are making the payment of customs duty, we need to pay interest at 15% per annum on this 1,20,000. Then next one, question number 49. John Biden, aged 32, is a tourist of US origin. He has come to India on a travel visa and carries with him the following articles as a part of baggage. Used personal effects, this is exempted. Used personal effects is fully exempted. Travel souvenirs is also exempted. So, he is not a tourist of Indian origin, tourist of foreign origin. Laptop by a person more than 18 years, he is 32. So, that is also exempted. Next, 200 grams of tobacco. How much is permitted under general fuel allowance? 125 grams. So, 125 grams is permitted. So, 125 into 5. So, that is 625 is permitted. The remaining will not be permitted. That is 75 grams. So, this 375 will not be permitted under GFA and on that 110% will be the customs duty, baggage duty. Then 50 cigars. How many cigars permitted? 25 under GFA. So, 25 into 100. That will be 2,500 under GFA, remaining 2,500 will be not under GFA, but it will be 110%. Then firearms will not be coming under GFA 110%, that is 80,000. Then cartridges of firearms 80, 50 cartridges is only eligible for GFA. So, 50 into 500 that will be 25,000 eligible for GFA, remaining 30 cartridges into 500. So, that will be ineligible for GFA and 110% will be taken. Then 1.5 liters wine eligible for GFA. Then mobile phone is also eligible for GFA, dutiable. These are all dutiable articles. But sir, mobile phone can't we take it as used personal effects? It is not given as used personal effects. If it is used means already it would have been covered under the first point. As it is not used, that's why it is given separately. So, these are all dutiable. Now, for a tourist of foreign origin, what is the baggage allowance? So, 15,000, only 15,000 if he is coming from other than Nepal, Bhutan, Myanmar. So, therefore, total 625 plus 2,500 plus 25,000 plus 5,000 plus 80,000. So, 1,13,125 minus 15,000, 98,125. On that 38.5% is the baggage duty. But on all these things, the baggage duty will be 110%. 110% will be the baggage duty. What are the goods on which baggage duty is 110%? Firearms, cartridges of firearms exceeding 50, cigarettes exceeding 100, cigars exceeding 25, tobacco exceeding 125 grams. Then last question, two exporters, namely Sunlight Exports and Moonlight Exports, have achieved the status of status holders in the financial year 23. Every year, both the companies have been regularly exporting the goods to approved nations. To achieve such status, what would have been the minimum export performance? So we need to write about the status holders. What is the minimum export performance to achieve 1-star status? $3 million. So thereafter it will be $15 million. So thereafter it will be $50 million. Thereafter $200 million and $800 million. And this export performance will be computed based on current year and preceding 3 years. And they have to achieve this export performance for a consecutive period of 3 years, and then only they will be eligible to get the status. So current and previous 3 years. So this is a theory question you need to write about. This is how a question could be on FTP. So with this, we have completed mighty 50 questions. And so thanks for listening to this patiently, and all these questions. So these are all like from each and every chapter. What are all the important, based on the analysis of last few attempts, I have taken this, but it may or may not come in exam. So don't scold me if it is not coming in the exam. See, it is just a strategy what we can make, but finally it is up to the ICI. But these 50 questions will give us a overall idea. And if you have solved workbook, you please practice the top 200 questions which I have selected so and given in the solved workbook. Thank you. Signing off. Take care. Bye. And I will be available for your doubt clarifications in the Telegram. Whatever queries you have, you can post it in Telegram. Thank you.